Good evening, all of you. So let us continue the discussion of explanations to section 43.1. There are few explanations which are pending over here. We will complete that and then we will go ahead with the next part of depreciation. The next explanation is a big one in which we have to see lot of different things. Pay attention on the board, please, all of you. For that, I am making one chart on the board so that it is simplified for all of us. Pay attention on the board. Treatment of subsidy, grant, reimbursement, etc. If you receive subsidy, grant, or reimbursement for a fixed asset, okay, from any person, then the treatment is you have to reduce from what? Actual cost. Now, where it is written, I will tell you the citation also for each and everything. It is actually specifically written in explanation 10 to 43.1. Okay. So, if you receive any subsidy, grant, or reimbursement with respect to a fixed asset, plant, machinery, furniture, building, you have to reduce from the actual cost of the asset, which is written specifically in explanation 10 to 43.1. So, what is the difference between subsidy, grant, and reimbursement? These three are interchangeable terms, but there is obviously some difference between the three. Subsidy is something, if I want to buy an asset of 100 crore, so I told the government or any other person that please help me. So they told me that you go to that particular place and tell them that you want this machinery, this plant. They will give you at 80 crore. Okay. They will give you at a subsidized rate because 20 crore we will give them. Okay. So if something which you buy at a concessional rate because somebody else is paying for that, some portion is paid by somebody else. So that is your subsidy. Now what is a grant? Grant is something which you receive upfront from the government first. And then you buy the asset. The government gave you 20 crore first. And then you are going to the supplier and buying that plant and machinery. 80 crore you are paying from your pocket and 20 crore you have got from the government. The third thing, what is reimbursement? Reimbursement is government is telling you, you buy first, we will give you later on that 20 crore rupees. In either of the case, it's an incentive, it's an help from a person to you. Okay. In either of the case, you have to, the treatment is going to be same only. You have to reduce from the cost of the asset. Okay. Now, it's a complicated issue. That is the reason I'm making one chart for you all. Then I will show you the provision also. Suppose a subsidy, grant, reimbursement is received with respect to a revenue item. Which item? Like example, the government is giving you subsidy to buy raw material. Okay. The government is giving you subsidy to pay electricity bill. Are you clear? Then the law says that it is nothing but what? An income, and for that they have specifically defined this under section 224(18). Section 2 clause 24 is the definition of income, correct? All the incomes are defined in section 2, clause 24. In that 18th clause talks about subsidy. So if the subsidy is for a capital item, like fixed asset, reduce from the cost. If it is for a revenue item, like raw material, like electricity for paying salary to employees, all these are revenue items. It is not for buying an asset. Then you have to reduce, then you have to consider that as an income directly, add to the PGBP income. Okay. Third, if a subsidy if there is a waiver, if there is a concession, if there is a duty drawback, from etc. from central government or state government or certain body or authority, then that is also considered to be an income under section 224(18). Now let me give you an example of this. Suppose you have taken a loan from government, okay, of 500 crore rupees. I'll write the example over here so that you can understand when you revise the things. Mr. A has taken what? Has taken a loan. From whom? From government. And then government has what? Waived off that loan. Then that will be considered as what? Income under section 224(18). Okay. Directly add to the income. Okay. Fourth, if the subsidy is with respect to LPG, you might be aware that once upon a time, now though they don't give any LPG subsidy. Once upon a time, the government used to give LPG subsidy. What is LPG subsidy? That is for a gas cylinder, correct? They used to give some subsidy to the common people of this country, correct? They used to credit some 500 rupees, 600 rupees per month. Now they have withdrawn that, I think so. During election only they give all these things. Earlier it was for the entire year, okay? So what is the treatment of this subsidy? That is the question which was asked to the government. I told you, I think so in the first lecture, that the subsidy is included in the definition from 2015 onwards, right? Remember or not? So when in 2015 they brought subsidy in the definition of income, people asked question, we are going to get this 500, 600 rupees per month. In the entire year, we will get 5,000-6,000 rupees as LPG subsidy. Will you be considering that also as a income? The answer is no. Okay. The government said that no. Subsidy with respect to LPG or any other, these are small amounts here. With respect to individual benefits. Which benefits? For example, there are some students who want to study, so the government is giving some subsidy to them for their personal benefits. Okay. Government said that our intention is not to charge you on personal incomes. Our intention of subsidy, taking tax from subsidy only if it is received with respect to what? A business or profession. Otherwise, we are not interested. Okay. So this is not considered to be what? It is not an income. Okay. And one last thing, which I will write over here. I don't have much space, but I will try to adjust in one page itself so that everything is there on one page. One last thing is, for last point, I need to explain you something. Pay attention on the board, please. This is the Finance Minister of India. The Finance Minister of India in the finance budget announces lots of schemes for the benefits of the citizens of this country. For example, in the budget, the Finance Minister is announcing, I allocate 50,000 crore rupees for women's safety. I allocate 1 lakh crore rupees for medical insurance for the poor people of this country. I allocate 5,000 crore rupees for this purpose, 10,000 crore rupees for this purpose. All kind of such announcements are generally made in the budget. Okay. Now the question is, once this announcement is made, how this particular scheme is implemented. Okay. That also we need to know. Suppose 50,000 crore rupees is allocated for medical insurance of all of us across the country. So how this scheme will be implemented? Okay. So for that purpose, the government makes different kind of trust. Separate trust is made. A separate institution is made for every purpose. So one person, suppose Arun will be given the responsibility of taking care of this 50,000 crore rupees. The government will say, Arun, you will make a trust. We will transfer you 50,000 crore rupees and you will take care of what? The medical insurance of the people of this country. Similarly, Balaji will be given some other responsibility and we will transfer 1 lakh crore rupees to Balaji. The government will transfer 1 lakh crore to that trust and Balaji will use that money where? For the objects for which the government has announced in the budget. Okay. So suppose 50 schemes the government has announced, different funds has been allocated to different institutions. So the question which was raised, the government is giving 50,000 crore rupees to Arun for what purpose? For the purpose of fulfillment of the scheme of the government, correct? So is that also a assistance given by the government to Balaji? Please tell me. The answer is yes. But that will not be taxable in the hands of what? In the hands of Balaji. Because that is for the fulfillment of what? Fulfillment of the government commitments. Therefore, any subsidy, any assistance given by whom? Given by which government? Central government. Okay, not state government. For fulfillment of commitments of government to a central government trust or a state government trust, this is not an income. So now let's see with a bird's eye view exactly what is the treatment for different kind of subsidy, grant and reimbursement. If it is with respect to fixed asset, close your eyes and do what? Reduce from fixed asset. Forget it. Okay. If it is with respect to revenue item, then add it to the income. Okay. If it is a waiver, concession, duty drawback, not subsidy, grant, reimbursement, something else, some other kind of assistance from the government, then you add it to the income. Example, Mr. A is getting a loan and that loan is waived by the government. If it is an LPG subsidy or any other subsidy for your personal benefits, okay, then that is what? That is not an income. And last but not least, if the central government is giving any kind of assistance to the central government trust or a state government trust to fulfill their commitments, then that is also not considered to be an income. I want you all to write down this somewhere, please, in your notebook. Because why I have made you write? Because everything is given at different place in the law. This is given in explanation 10. I will tell you the citation. Okay. This is given in 22418. This is given in 22418. This is given in a CBDT circular. Okay. And this is also given. Last one is also given in 22418. So at multiple places, they have spoken about different treatments. So let us write all of them at one place. That will be easier for us on the day of examination. Online students, please write. I will make it big so that you can see properly. If you are done with this much, then I will scroll up. Okay. Shall I scroll a little bit? You can write this example. Now, so you can continue writing if you have not completed. I am just saying something which I have said earlier also. So we have done how many explanations? So explanation 2, 3, 4, 4a also. That least one was 4a, 5, then 8, 9, 10 and 11. 9 explanations we have done, okay. Now there are 4 to 5 explanations which are yet pending, okay. I know that, I remember when to take up which one. Like amalgamation, I am going to take up in the next half an hour. Then while doing scientific research deduction in the next 1 or 2 days, we will see that also. Then 3580 deduction, when we will see that explanation also. So as of now, we are moving ahead with the definition of actual cost now, okay. Now there are some small points which we need to address in depreciation. One by one we will address that, and then we will move ahead with our SLM depreciation, okay. Because at the beginning of the discussion I have told you that there are 4 types of depreciation in which there is an SLM depreciation also, correct? Now the next discussion is, pay attention on the board please, last bench please see here. Since we are talking about depreciation, it is our duty now to also talk about unabsorbed depreciation, which is also given under section 32 only in subsection 2. So what is an unabsorbed depreciation? An unabsorbed depreciation means a depreciation which you cannot claim as a deduction in the current year because of the lack of sufficient income. You don't have sufficient income in the current year, okay? So you cannot claim your entire depreciation. It is remaining unabsorbed. Like for example, this is your P&L account. Suppose your sales is 100 rupees. Your expenses are already, your operating expenses are already 120. And your depreciation is 30 rupees. Now obviously there is a loss of 50 rupees, correct? Now out of this loss, the income tax says you have to segregate the loss into 2 parts. Whatever loss is coming because of expenses. How much loss is coming because of expenses? 20. That will be treated as a business loss. What it will be called as? Business loss. And whatever loss is coming because of depreciation, that is 30 rupees. That will be called as what? Unabsorbed depreciation. Okay. Now the treatment of both of them are different in the income tax law. You might have done it in your CA Inter also. This loss is only allowed to set off for some limited number of years, correct? How many years? 8 years. Business loss you can carry forward and set off for 8 years. Restriction number 1 is on the time limit, correct? One more restriction is there over here, and that is you can carry forward and set off only against business income. Yes, you cannot set off against other incomes. So there is a restriction in setting off also. There is a restriction in time limit also. But when it comes to unabsorbed depreciation, there is a great benefit given by the government to you. First of all, there is no time limit to carry forward. You can carry forward the unabsorbed depreciation as per section 32 subsection 2 for infinite number of years. Till the time you are alive, you can carry forward, okay? Till the time the assessee is there, individual is there till the death, company is there till the liquidation, firm is there till the dissolution, as the case may be. Okay. So till the time the assessee is there, you can carry forward UAD. There is no time limit in restriction. Second benefit, you can carry forward, and in the current year also, UAD can be set off against any income except salary income. Except which income? Apart from salary income, you set off UAD against what? Any income. You can set off against your other business income. You can set off against your house property income. You can set off against your capital gains income. You can set off against your IFOS income from other source also. If it is not sufficient, you can carry forward and set off against all this income in the next year except salary. So there is a great amount of benefit the government has given for UAD. Now, practically, if you have these three things, I am writing on the board, you please tell me what will be your priority to set off. Suppose you have a PGBP income of 10 lakh rupees. Okay. Now you have three things in front of you. You have unabsorbed depreciation of 6 lakh rupees. You have current year depreciation. This is last year depreciation which you are carrying forward in the current year. This is current year depreciation 25-26 of 6 lakh rupees. And you have brought forward business loss of last year 6 lakh rupees. Okay. Now, in priority, what you will set off against 10 lakh first? First, you will set off what? Tell me. First, brought forward loss? No. First, current year depreciation. The reason we have already done in the morning. Why? It is mandatory to claim depreciation. Are you clear? Your priority should be first this. Okay. Then what? Then you are correct. Second what? Why brought forward losses? Because it will expire after 8 years. Something which is going to expire. Let us use that first, correct? Then third one will be your unabsorbed depreciation of the last year. Okay. So this should be your priority of carrying forward and setting off the things. Okay. You can check this over here on page number 1.10. Set off and carry forward of unabsorbed depreciation. Please. Now the question which I would like to raise is why? Why unabsorbed depreciation has been given so much favoritism? Why this has been given so liberty? Why this has been so encouraging for the assessee? Why it has been so different from business loss? Why not they are giving such benefits for business loss, and for unabsorbed depreciation they are giving such great benefits? Okay. Any reasons you can tell me? Please. No? Think. You start to think, at least something will come to your mind. Why they are giving such benefits to us as far as unabsorbed depreciation is considered? Carry forward for infinite number of years. Set off against any income except salary income. Okay. But for business loss, they are not doing. They are very restrictive for business loss. Why? Please. No? Suppose if you become a chartered accountant in May 2026, suppose, and immediately after becoming a chartered accountant, what is your plans? What is your plan? At least that you can tell me. Rough plan, rough. I am not saying exactly what is your plan. What is your plan? To do a job somewhere? Initially? Why not start a business? Why not start with a business? You are worried about the investment? You are worried about that even if I get some money from somewhere and if I invest, what if the business doesn't run? Tell me now, please. Yes. If everybody start thinking like this, Then who will invest in the capital investment? Who will invest in building? Who will invest in plant, machinery, furniture? Who will do this? If everybody will think like this, correct? 99% will not go for this. Obviously, we have worked so hard to become a chartered accountant. We'll play safe initially, correct? We will earn some money. Then we will think about after 3-4 years later whether to start with our practice or whether to get into some other business. Because going for a job is easier. There is not much risk in that. But starting a business, taking a risk, the most important risk is investing in capital, investing in plant, machinery, furniture, building. And in case there is a loss, I'm not able to survive in the business, then what? So there has to be some encouragement given to the businessman that you invest in building, you invest in plant, you invest in machinery. If you are not able to do good, don't worry. Whatever depreciation you have claimed, okay, that will not go waste. Correct or not? Close the business. You have tried your best, close the business. Whatever depreciation is there, you will do something in your life to earn money. Please tell me. Set off against that income. For how many years? Till the time of death. You have to give that encouragement for what? For investing in capital. Correct? Business loss comes from where? Tell me. Business loss comes out of what? Out of expenses, correct? Rental, salary. If my business is tomorrow not working, I will remove my employees. I will stop paying rentals. I will leave the property, correct? That is easier. But capital investment which you have already done, that is done. Yes or no? Now you cannot go back and correct that, correct? So you need to give such kind of people extra benefit. Yes or no? That is the reason unabsorbed depreciation is treated, especially under the income tax law. You can set off against any income except salary. You can carry forward against. You can carry forward till infinity and set off against any income except salary. You have to give special benefits for the losses which is coming because of capital investment. The losses which is coming because of the revenue expenses can be stopped at any point of time. But capital investment is done, is done. So that is the reason they have been very, very liberal towards what? The unabsorbed depreciation. Okay. Very important discussion it is. In every question you will find out unabsorbed depreciation in the paper. You have to set off in this priority. You have to remember this priority also in the paper. Okay. Anyways, coming back to once again this subsidy discussion. The subsidy discussion is yet not completed. There is one ICDS on this. So we will go through that ICDS first. Then we will move ahead towards the next part. So if you come on the previous page here itself, ICDS 7. On page number 1.9, please come to this page, all of you. They have not asked this ICDS so far in the exam. This is about what? Government grant, recognition of government grant. Okay. When should I recognize the government grant? How will I recognize the government grant? In case in future, if I violate any of the conditions that the government has attached, then I have to refund the grant to the government. What will be the treatment of that under the income tax law? Okay. We need to see all of them. So there are 3 questions which this ICDS tells us. First, when will you recognize the government grant in income tax? When will you recognize means in which year you will start to pay taxes on that particular grant. Second, how will you recognize? Third, in case you violate any conditions attached by government, you have to refund the grant. Then what is the treatment of that in the income tax law? So when will you recognize the government grant? This is given in this first box. Government grant should not be recognized until there is a reasonable assurance. Unless and until you have 2 kinds of reasonable assurance, do not recognize the government grant in income tax. First, that the person shall comply with the what? Conditions attached. If you are sure that you will fulfill the conditions, whatever conditions the government has told you to fulfill, if you are sure that you will fulfill, you recognize the grant. Okay. Second, you are sure that there is a reasonable assurance that you will what? Receive the grant. Okay. Sometimes some government promises, but they don't give you the grant on time. So if you are not sure that whether you will receive or not, don't recognize. The day when you will receive it, at that time you recognize. So there has to be two kinds of assurance in the mind of the assessee. First assurance is within yourself. Okay. Whether you will fulfill the condition or not. Yes, I feel that I will fulfill the condition, recognize. Second, whether you will receive the grant or not. Yes, the record of the government is very good. They have been giving the grant on time whenever they have promised, then you recognize. If you feel that they will not give you on time, don't recognize, postpone your recognition on the date of receipt. Okay. Once you receive, then you cannot tell me postpone the recognition. This is the first part which you have to see. Check it over here. Then the second part will tell you how to recognize. Okay. Shall I go ahead? How to recognize? We have seen some of them in the discussion of our chart itself. With respect to depreciable asset, don't read. Just directly tell me how to recognize in case of depreciable. Reduce from the cost of asset, correct? Deduct from the actual cost. Okay, the ICDS cannot tell you something which is different from what? The income tax law. It has to say the same thing, correct? The third column, where the government cannot be directly attributable to asset. This I have to explain you. Then deduct proportionately from actual cost. Now, what do I mean by this? Listen carefully. Let me give you one example. This is assessee. This is government. Now, the assessee is saying that I am taking up a project in a rural area of 120 crore rupees. Government, please help something. So the government said that, yes, you are doing a project in rural area, so we will help you with the respect of this project. 20% we will give you subsidy. Now, with the help of this 120 crore, the assessee is going to buy some land and building of 60 crores, some plant and machinery of 40 crore, and some furniture of 20 crore. This is the breakup of the project. Okay. Now, how much the government has promised they will give? How much? 20%. So that amounts to how much? 24 crore the government is going to give you as a subsidy on this project. So if the government gives you subsidy with respect to a single asset, then reduce the from that asset. Okay. But if they don't give you with respect to single asset, but they give you for assets, okay, then what assessee used to do earlier, you know, you are assessee, intelligent assessee. What will you do if given a choice? From where you will reduce? From where you will reduce this 24 crore? Tell me now, please. From building or furniture, correct? You will not touch your plant and machinery. Why? Because that is depreciated at higher rate of 15%, correct or not? The government said that you have to proportionately reduce from the entire project cost. Okay. So from this, I will reduce 12 crore. Are you clear? From this, I will reduce 8 crore. And from this, I will reduce how much? 4 crore. And the total will come to how much? 24 crore. And the net will come to how much? 96 crore. Please put an asterisk over there and write down this example, please. So, if it is with respect to an asset, then directly reduce. If it is with respect to more than one assets, then proportionately reduce. wrote. Next, when the government grant is receivable as a compensation. Now, what compensation the government will give you? For what? Can you imagine some? Floods. Excellent. There has been floods in the state. My business has been ruined because of that. Okay. There has been riots. Okay. It is the responsibility of the government to take care of me. Correct? So they are giving me some compensation. Okay. They are not going to leave anything. Everything is taxable. Okay. Even that is taxable. And this is so hopelessly taxable. Check when it is taxable. It shall be recognized as of the period in which it is receivable. The moment the government has what? Announced that you will be receiving 1 crore rupees. You have to first pay tax, then receive. Okay. Check. They should have kept at least this as what? When it is received. Correct? So first point covers depreciable asset. This also covers depreciable asset. This covers compensation. Okay. Second one is the complicated one that we will see at the end. The last one is other than 1, 2, 3, 4 that you will recognize as per your accounting principle. Check. Matching concept. As per what? Matching concept. As per accounts. Now coming to this middle one. We will take one example with numericals to understand this. Where the government grants relates to non-depreciable asset. Let me read it once. Recognized as income over the same period during which the cost of obligation is charged to income. Okay. Now let's try to understand this with the help of an example. Suppose the government has given you 100 crore grant for buying raw material. Okay. Now that cannot come over here. That cannot come over here. That cannot come over here. Okay. That will come in the second column. So the moment the government has given me 100 crore as a grant, I will pass a journal entry, bank account debit, 100 crore to government grant. How much? 100 crore. And in the bracket, I will write this is for what? Raw material. The government has told me that we are giving you 100 crore grant. You purchase the raw material, make certain product and give it in the rural area. Okay. Sell it in the rural area. I will pass this journal entry and in the balance sheet, my balance sheet will look something like this. On the asset side, there will be 100 crore in the bank account. On the liability side, I will create one account by the name called as what? Government grant of 100 crore. Okay. Now, this is definitely income. As I have told you, if the government grant is received for what? It is received for what? Raw material, for revenue item. Then it is income, correct? Now we are not learning whether it is income or not. It is definitely an income. We are learning when to recognize that income in the P&L account. Are you clear? This is definitely an income. There is no doubt about it. That this chart itself says us that this is what? This is a income. The question is not whether it is an income or not. The question is when to recognize, in which year I will pay tax on this 100 crore. Okay. So that's what the law is saying over here in this box. It will be recognized as income over the same period during which the cost of obligation is charged to income. Okay. For what purpose the government has given you this 100 crore? For purchasing the raw material, correct? Now, for example, this is my P&L account. Okay. Now, in previous year, 25, 26, I have to purchase raw material of 100 crore rupees over the period of time. So, in the current year, I purchase raw material of 40 crore rupees. How much? So, how much obligation I have completed? 40. So, that much income also you have to, please tell me, recognize in the P&L account. Is it clear? So, you will pass a journal entry now. Government grant account debit 40 crore to what? To P&L. 40 crore will be considered as income of the current year. Is it clear? next year another 30 crore you have your obligation is completed. So again, 30 crore debited to P&L in the form of a purchase, and 30 crore you have to credit in the form of an income. 70 crore completed. Then next year again 30 crore. Your entire obligation is completed, and then your government grant will become what? Zero after that. As of now, how much is my government grant? It is 60 crore. Okay. Just write down this example and then we will go ahead with this example. I have to go ahead. Suppose in future I do not complete my commitment, then if I have to give the refund to the government, then what will be the treatment? Okay. Now suppose, don't write anything after this. Just write down till here. Don't write something which I am writing now. Suppose in the next year, pay attention on the board. Suppose in the next year, that is which year? Previous year 26-27. The government will come and check whether you are using the money properly or not. Tell me now. So the government came and checked whether you have purchased proper raw material or not. Whatever we have said, you have purchased that only, or you are purchasing something else only. Okay. So suppose in the next year, previous year 26-27, the government came to know that the assessee is violating the conditions by not purchasing required raw material. Therefore, now the government has demanded refund of how much? 100 crore. They will ask for the entire refund. You are using the money for some other purpose, correct? Now, please tell me how much money you have out of 100 crore. 60. Now, what will I do? Check the treatment of refund. Okay. Point number A and B. The refundable amount will be first applied against unamortized deferred credit remaining. How much is the credit remaining in the balance sheet? 60. The excess can be charged to what? P&L account. So I will pass to journal entry. In 26-27, wait. Government grant account debit. How much? Tell me. Grant is gone from the balance sheet. P&L account debit. How much? This is my loss. Yes or no? I have to pay from my pocket to bank account. How much? 100 crore. Just wait. Don't write. What does your common sense says? If you violate condition with respect to depreciable asset, what will you do? Add back to the WDV of the block of asset. Correct or not? Is it clear? Now just write down this. If the government is very liberal and if the government tells you, okay, you pay only 60 crore, okay, then nothing will be charged to P&L, okay? So with respect to depreciable asset, again I am asking, what will be the treatment? Reduce, and if you violate the condition, add back, opposite treatment. Okay, with respect to multiple assets, reduce proportionately, and if you violate, then add back proportionately. Okay, with respect to compensation received from the government, when it will be considered as income, when it is announced by the government, when it is receivable. Correct? Now they have not asked this ICDS in the exams so far. Okay, this is more or less like an accounts rather than tax. So that's the reason they have not touched this particular ICDS so far in these. Written? Let's move ahead with the next part of depreciation. Last 3-4 parts are there. Small parts, not as big as actual cost now. Now we will learn how to claim depreciation in case of amalgamation, in case of demerger, and in case of certain successions under the income tax law. Depreciation in case of amalgamation or demerger or succession. Now, obviously, these terms are defined in the income tax law. We will be talking about the definition sometime later. What do I mean by amalgamation? It is defined in section 2. What do I mean by demerger? It is defined in section 2. There is a separate chapter in your book completely discussing all the aspects of amalgamation. Today, I am only interested in depreciation, not other aspects. Okay. In amalgamation, you need to talk about lot of things. When one company gets merged with another, lot of assets are transferred. What is the capital gain implication, etc., etc., etc. It is there in great detail in CA final. The term succession is not defined in income tax law. So, but still I will speak about all three of them little bit so that we understand at least the term as of now little bit. What is an amalgamation? When two companies are merged together or when one company takes over another, correct? I am A limited, you are B limited, I am acquiring you. Okay. So the one who is acquiring is called as amalgamated company and the one who is selling is called as amalgamating company. What is demerger? It's a hiving off of an existing entity, breaking up of an existing entity. AB Limited has two divisions, so the company is deciding to separate out one division out of it, correct? Now, what is succession? This is a new term for us, okay? Succession means change of entity, like I am a sole proprietor. Now I wish to convert my entity into a company. Or I am a partnership firm. I wish to convert my partnership firm into a company. Or I am a partnership firm. I want to convert my entity into an LLP. Are you clear? So when you are changing the entity from one form to another, you are called as succeeding from one entity to another, commonly known as succession. In all the three cases, there is a change of entity. In amalgamation, there is a change of entity. In demerger, there is a change of entity. In succession also, there is a change of entity. So how to claim depreciation when there is either of the three events which is happening in the previous year 25-26? Pay attention on the board. Suppose I am A Limited. I have a furniture. I have a block of furniture. The opening WDV of the furniture is say 1 lakh rupees. Now we all know that furniture is depreciable at what rate? Tell me. 10%. Okay. This is the opening WDV of the furniture. This is on 1st April 2025. Few months later, another company B Limited on 3rd of October 2025 is planning to take over my company. The moment this thing is going to happen, I will be called as amalgamated company, and this will be called as amalgamating company. Okay. Now, technically speaking, what should happen here? Who should claim depreciation? B Limited should claim depreciation, correct? A is selling the asset to B. So in the year of sale, the seller does not get the depreciation. Yes or no? B should claim depreciation. Technically, this is a very simple treatment. But no, the government has created a proviso for these people. Proviso means an exception. The government says that in case of amalgamation, we will give depreciation to both of them. This is an exception to the rule. This is the first exception where you are going to get, A Limited is going to get depreciation in the year of sale also. There are only two exceptions in the entire income tax law where you get depreciation in the year of sale also. This is first of them. Second will also come in maybe in next 1 hour. Sir, how to compute depreciation? There is a proviso which the law has made. The law says, I am telling the provision. In case of amalgamation, in case of demerger, in case of succession, compute depreciation as if no amalgamation has taken place. Assume amalgamation has not taken place only and compute. Please tell me what will be the depreciation. Say louder. 10,000. Okay. In case of amalgamation, demerger and succession, compute depreciation as if no amalgamation has taken place. Therefore, just assume there is nothing like B Limited. Okay. B Limited does not survive only. Compute depreciation. Compute it. Now, answer is coming to 10,000. Now the law says, comma, after that. Now divide this depreciation between both of them on the basis of number of days the assets are used by both of them. Okay. So now you have to segregate this between both of them. So please help me to segregate. A Limited is using the asset from 1st April to 2nd of October. B Limited is using the asset from 3rd October to 31st of March. Correct? Tell me the number of days, please. Here I will write how much? 179. Correct? Till 3rd October it is 180. Correct? So 2nd October it will be 1 day lesser. How much here? 1? How many days are there in a financial year? 186. Correct? Now I will bifurcate this in this ratio. 10,000 into 179 divided by 10,000 into 186 divided by 365, or I can also take the balancing figure. Correct? I can do balance also, na? 10,000 minus whatever the answer comes. So what is the answer if somebody can just calculate this? 4904. And this one? 5096. Now again I am saying the provision. Don't write this, you write down later on. Okay. I have to talk about various possibilities. Please repeat the provision with me. In case of amalgamation, compute depreciation as if no amalgamation. While computing, assume there is, once it is computed, after that, then don't assume it is not there. Then assume amalgamation has happened. Okay. So for bifurcation, you have to assume that amalgamation is happened. Only for computation, you have to assume that it has not happening. I'm just making one addition to this particular example. Suppose A Limited has purchased a furniture on 1/7/2025 of 2 lakh rupees. Okay. Please help me to compute depreciation for this 2 lakh rupees also. How will you compute depreciation? Tell me now, please. Depreciation will be 20,000. Compute depreciation as if no amalgamation has taken place. So it is used for more than 180 days. Therefore, full depreciation, correct. Now, should I bifurcate between A and B? So A will get how many days? 179. No, now the days will count from 1st of July. 31 days of July, 31 days of August, 62, 30 days of September, 92, and 2 days of October. How many days? 94 days. Okay. What about B Limited? 186 days. Is it clear? So I will divide this into 20,000 into 94 divided by 275 it is, I guess. Just check it once. 285. What is the total of these two? Tell me. 280 it is coming. 20,000 into 186 divided by 280. Tell me the answer, please. 67 and this 13,286. I would like to further add some examples in this. Now that you, even if you don't write, it's okay, but at least I would like to ask. What if the asset is purchased? What if the amalgamation is not happening on 3rd October, but it is happening on 1st Jan 2026? Okay. Shall I ask? And what if now A Limited is purchasing this asset on 15th November 2025? Did you understand the changes in the question? What will happen? First, compute depreciation as if no amalgamation has taken place. How much depreciation you will take? How much? Half. Are you clear? Not full, because now the asset is put to use for less than 180 days. Last but not least, that is very simple. Even if I don't ask you, that is okay. That what if the asset is purchased after this? Then entirely B Limited will claim, and that will be half. Are you clear? Yes. Because B Limited will purchase after 3rd October, then it will become half. Is it clear, all of you? Just write down this example, please. The provision is over here. You can read this provision if you want, and you can write down this example. Days are proper, na? I have not calculated the days. Sure, na? I just put random numbers on the board, whatever comes to my mind at the time of teaching. Which is 185? See, somebody is raising question on days. A Limited is 185. Which one? This one? Let me count. April, how many days? 30. May 31. June 30. July 31. August 31. September 30. October 2. It is 185. How it is 184? Here it is. You have, don't write all the wrong amounts you have told me. Wait. How many days from year to year? 185 days it is. And this is 180. I'll just recompute. You can copy that now. I'll just recompute the things. 5068 4932. Below also you might have made a mistake. Huh? Definitely. This is wrong, na? This is not 186 then. This is what? This is also 180. Correct. Just wait, I'll change first. This is 274. This is 180 into. Please don't talk. Now copy this and compute the answer, please. What is this answer? 20,000 into 94 divided by 274. 68, 61, 13, 139. Okay. Now these assets are going to which entity? B Limited, correct? Whether B Limited will put this asset in their block? Whether B Limited will put this asset in the block? So now the question is at what value? At what amount? Okay. So whatever is the WDV in the hands of A Limited, okay, that will become what? The cost in the hands of P Limited, and that is written in, go behind, where? In the explanation 6, sorry, explanation 7 and 7A. Check. Cost or WDV to the amalgamating company. Okay. Obviously, the assets which are going from A to B has to be put in the block of B, correct? So whatever is the WDV there, that you will put over here. Now, one very practical question I am just trying to address you all, which is more important practically rather than academically. But as a student, you should know this. That is the reason we are trying to understand this next concept. Pay attention, please. For example, this phone I bought, or a car I bought, or a scooter I bought, whatever I bought for my business purpose. Let's take an example of phone only. Suppose I bought a phone for 1 lakh rupees, example. Now we all know that phone is depreciable at 15%, correct? Now, obviously this phone which I have bought, I am claiming first of all 18% GST on this. Okay. Then I am also putting this in the block of asset and I am claiming depreciation also. 50% has to be financed by the government or not to me? Yes or no? 50% of the phone will be financed by the government. Now the question is, am I using this phone 100% for business and profession? And the answer is no, correct? I am attending my business calls also, I am attending my personal calls also, correct? So what if an asset is used partially for business and partially for personal purpose? What shall I do? Tell me. Yes, please. It is not possible to ascertainable. In case of phone, how will you identify that how much I am using for what? Personal and how much I am using for what? Business. It is very difficult, na? Yes, please. Say. What shall we do? I didn't get you. What he said? Say na loudly. Time allocation for? How to identify time allocation for personal and business? Yes, please. Full depreciation I should claim. Okay. There are different answers. Obviously, I am getting. Obviously, all of them cannot be correct. Anything else you would like to suggest? This problem will come for many assets. This will come for car also, correct? This will come for laptops. Yes. You have one laptop you are using for your personal purpose as well as for your business purpose. I don't know GST. Okay. Please teach me income tax. What you do in just GST, I am not aware of that. Anything else? Should we get full depreciation? Tell me now. No? Should there be some provision in such cases? Yes, there is a provision. Which is very high. how can I say? Hardly it is followed in the practical life. But there is a provision. If it is there, then we have to study. We have to at least see what exactly the law has to say. Then we will see whether we will follow that in practical life or not. Pay attention on the board. Just wait. I'll just. On page number 2.18, this is the provision which is talking about the situation which we are coming across now. This talks about 3 deductions. 2 deductions we have not learned so far, 30 and 31. We will be learning tomorrow morning. We know 32 at least. Okay. Read and understand in the reference of only 32. 30, 31 we will see tomorrow. Read and tell me what shall we do. Please read completely. What is written? What is written? You should restrict your depreciation to a fair proportionate part. Now, what do I mean by this? It is further leading to litigation, correct? What do I mean by fair proportionate? Tell me. How to reasonable? You are telling me alternate name for the word fair. Okay. You are improving my English. What do I mean by fair proportionate? I don't know. Correct? Fair is fair a very subjective word? What is fair for me is unfair for you. Correct? Right? So what shall we do? What do you think that the assessing officer are concerned for all such small things? Please tell me. I don't think so. And they are not. Yes, they will be concerned when you know. When you buy some very expensive asset. You buy a very expensive car of say 1 crore rupees. Okay. Are you clear? At that time, they might be getting into the discussion of the fair proportionate basis. Okay. This 1 lakh rupees phone is there, 15% depreciation. That comes to how much? 15,000 in the first year. Second year onward, that will further reduce, correct? 15,000. I am saying I am using 70%. Officer saying, no, you are using only 50%. What difference will it make to tax? Please tell me. Tell me now, please. Marginal difference, correct? So in practical life, what he said was correct. Last bench student. He said that take full 100%, sir. Okay. Even officer cannot prove that how much I am using for what? Personal purpose and how much I am using for business purpose. Now he will not tell me to open the call records, how many times you have called your wife, how many times you have called your father. He cannot do all such small things now. Therefore, honestly speaking, in practical life also, you would have done audits of so many individual clients, correct? Your clients are using asset for personal as well as business purpose. Have you ever disallowed proportionately? Tell me. No. For small assets, we don't do that. If the asset is big, if it is of huge amount, there might be some question which will be raised by the assessing officer. Otherwise, no. You can claim full depreciation of 15% on your actual cost. Is it clear, all of you? But the point I was trying to say, there is a provision. Okay. If tomorrow, in your case, if your client buys some expensive asset, then you would have to be little bit careful about it. Okay. That you cannot claim completely. In business, you have to yourself disallow some portion of it, saying that 30%, 40% is what? Say, personal in nature. So we are claiming depreciation only of say 60, 70%. So this is what this small discussion is all about. Practically important, but academically, I see I will not ask any question based on this. Okay. Because this is again subjective. Now let's move on to last part of depreciation, and that is which depreciation? SLM depreciation we are going to talk now. See on the board, please. If you are engaged in power generation or generation and distribution, then the government is giving you two options. Pay attention on the board, please. The two options are given to you for claiming depreciation. First, you can claim depreciation as per WDV as per block. Okay. You have this option. Okay. Second option is you have SLM as per individual asset. Here there is no need to make any block. Okay. In income tax earlier, all assets were depreciated as per individual asset only. Okay. I told you in the last class that the concept of block came in India from AY 88-89. Yes. So when the block was brought to India, the government gave the option of SLM was continued for the power generation assessee. For the power generation assessee, they said that you can continue to claim SLM or you can come in the new taxation scheme, that is WDV as per block. Even today, they have both the options. Whichever they want to follow, they can follow. Okay. But the problem is, if they follow the block method, that is WDV, obviously the depreciation will be lower over here. Tell me please. See, in the first year, depreciation will be same. But from second year onwards, which is more beneficial? SLM is more beneficial because there the amount of depreciation will be consistent. Here it will fall every year. Yes. So there is a disadvantage over here. To cover up this disadvantage, here you have an option that if you come over here, listen carefully, then you can claim what? Additional depreciation also. Okay. Is additional depreciation allowed to power generating assessees? Yes, it is allowed on new plant and machineries. But if you follow what? SLM, then no additional depreciation shall be allowed to you. The choice is yours. Okay. Whatever you wish to do, you can do. If you go for SLM, additional depreciation won't be allowed. If you go for WDV, additional depreciation will be allowed. So how you are saying all these things? I'll prove it to you technically as per the law. WDV depreciation is allowed under section 32 subsection 1 clause 2. And SLM depreciation, I am telling you the section number 32 subsection 1 clause 1. Okay. Now just remember, when we were doing additional depreciation, what was written in the last line? It is allowed, a further depreciation of 20% is allowed where? In subsection 1 clause 2. It means additional depreciation will only be allowed to those assessee who follow what? WDV. SLM people will not get additional depreciation. Are you clear? This is written in the book. You may not write down this. Now, let's talk about how will we get the depreciation. SLM is the most easiest method to teach. There is nothing. In college also, when we used to do depreciation accounting, SLM questions were the most easiest one. Yes. Here also it is like that only because the depreciation is going to be consistent every year. But still, let us take an example. The things are not as simple as it is looking. Pay attention on the board, please. Suppose I am purchasing a furniture. Say the cost of the furniture is 100 rupees. The rates of depreciation are same only here also. The rates are same. Suppose the rate is 10% over here also. Now, how much depreciation I will get as per section 32 subsection 1 clause 1? Depreciation under section 32 subsection 1 clause 1 will be 10 rupees every year, correct? Suppose 3 years have gone by. 3 years have gone. So after 3 years, how much depreciation I would have claimed? 30. This will come to how much? 70 rupees will be the WDV after 3 years. Now listen carefully. The real game will start here. Pay absolute attention. So in the first year, I claim depreciation of 10 rupee. In the second year, I claim 10 rupee. In the third year, I claim 10 rupee. After 3 years, my WDV is 70. Even if it would have been a plant and machinery, I could not claim what? Additional depreciation. Additional depreciation is not allowed in SLM. Now, after 3 years, I want to sell the asset. Okay. Now, if I want to sell the asset, suppose I am selling this asset, case 1. I am selling this asset for 50 rupees. Okay. Now, what will happen? Just wait. Or if I sell this asset, case 2, say for 80 rupees, then what will happen? Don't make any conclusions as of now. It will be a profit, it will be a loss. Let's not make any conclusion. Let's do as per the provision. Or if I sell this asset for 120 rupees, then what will happen? Okay. So in these 3 cases, what will be the treatment in the year of sale? That is the real fun. The fun is not in claiming depreciation. The depreciation of SLM, anybody can compute. It is just a percentage on a cost, and that will remain consistent till the life of the asset. Okay. Every year it will be 10 rupees. You don't have to recompute also every year, unlike WDV. But yes, when you sell it, the provision is amazing. So the law says here, first case. The law says if you sell the asset, SLM asset, for less than WDV, okay. So whatever is the difference between the WDV and the selling price, how much is the difference? 20 rupees. Is that a loss for you? Louder. That 20 rupees loss is called as terminal depreciation by the government under section 32 subsection 1 clause 3. This is the fourth and the last depreciation. What is terminal depreciation? Selling price minus the WDV. If the difference is loss, terminal depreciation. Now what do I mean by terminal? What is terminal means? Something which ends, correct? The name is also very logically given. This is the depreciation at the end of the asset in your business. Is the asset ending in your business? Yes, it is going out of your business. You are selling it to someone, correct? So at the time of going out of your business, the government is giving you 20 rupees what? Depreciation in the year of sale. Now this is the second exception and the last exception where you are getting depreciation in the year of sale also. There are only 2 exceptions in the entire income tax law. There are only 2. Nothing will come till the last lecture now. Okay. One is amalgamation and second is terminal depreciation. These are the only 2 exceptions where you get depreciation in the year of sale. There is no third case in the entire income tax law. In all other cases, in the year of sale, you won't get depreciation. So if you sell for less than WDV, whatever the loss you are incurring, you will be given as a depreciation at the end of the tenure of the asset. Okay. Don't write, it is there in the book, just wait. Now what if I sell for 80 rupees? If I sell for 80 rupees, are you generating profit? Your WDV is how much? You are selling at 80, correct? 10 rupees. Tit for tat. Okay, principle of equality, there is something like that. If there is a loss, we are giving you deduction, correct? So if there is a profit, that will be considered to be what? Deemed income under section 41 subsection 2. This thing has a technical name called as balancing charge. What it is called as? Balancing charge. You have to pay tax on 10 rupees and that 10 rupees will be added to your PGBP income. Okay. Just wait. Don't think about the third case. We will talk about the second case first. I have to speak few things about the second case once again. That what is a balancing charge? A balancing charge is nothing but it's a recovery of the benefit claimed earlier. Okay, it will take some time for you to understand this. How much depreciation you have claimed so far? 30 rupees. Okay. Yes. The WDV is 70, correct? So the true worth of the asset today is 70, correct? Are you recovering 10 rupees extra? So is that a kind of recovery of this deduction claimed? Please tell me. Yes. So balancing charge cannot be more than 30 rupees. It will be maximum how much? 30 rupees. It will help you in the third case. It will help you in the third case. Balancing charge will not be more than 30 rupees. Now in third case, you are selling for how much? 120. It is how much more than WDV? 50 rupees more than WDV, correct? But the balancing charge will be only how much? Please tell me. 30 rupees. Okay? Whatever depreciation benefit you have claimed, you have to reverse in the PGBP income year itself. 30 rupees you have debited in PGBP. Are you recovering that 30? Credit to the PNL. Balance it. Are you clear? What about the extra 20 you are getting? That will be capital gains. Are you clear? Because that you are recovering over and above the cost of the asset. Is it clear? So the extra 20 I will compute as what? What is the selling price of the asset? 120. What is the cost of acquisition of the asset? 100. 20 rupees will be capital gain. Short term, long term, whatever it is. Okay. I am not interested much in that. Okay. It may be short term, it may be long term. That depends upon the period. Okay. It will be long term in this case. After 24 months, all assets become long term these days. And indexation is gone. Everybody knows that? Yes or no? That is gone except one case. You don't get indexation anywhere. We will talk about that in capital gains. Now, there is some problem in this particular example. We need to solve that problem. I am not happy with this example as an assessee. Sir, what is the problem you are finding in this example? Let me tell you. 50 rupees you are selling, you are at loss. 20 rupees terminal depreciation claim benefit. 80 you are selling, you are at profit. 10 rupees deemed income. 120 you are at a profit of 50, but only 30 rupees will be added to PGBP and 20 will be added to capital gains. Now, what I am unhappy with is as follows. See on the board. Are we computing capital gains in this third case? Why? Because we are selling the asset, correct? Are we not selling the asset in the first and the second case? There also we should compute, na? Yes or no? Let's compute. Selling price is how much in first case? Tell me. 50 rupees. Let me write at least. Then we will make a conclusion. Okay. What is the cost? The cost is not 70. The cost is 100 only. Okay. What is the loss? Capital loss is coming? Yes. Now, if I do this calculation, listen carefully. I will start to get double benefit. I'll tell you how. See on the board. Am I claiming 50 minus 70 already as a deduction in PGBP? Say na. Now 50 minus 100, again I wish to claim where? Capital gains, but right? Will it lead to double benefit to the assessee? They are not going to give you this. Now what they have done, you know, in this case, they have said that you should not write the cost as what? 100. They have said that we will redefine the cost. What we will do? Redefine the cost. You should not write cost as 100. Now they have made such a formula, listen, that if loss is coming in capital gains, then your gain will come to 0. How much? They have made such formula. I'll show you the formula just now. But if gain is coming, which is coming in third case, correct? Then it will remain 20 rupees. Are you able to understand? Shall we see that formula? They have told us that selling price minus cost of acquisition should be redefined. Selling price minus cost of acquisition should be redefined. You don't take 100 rupees as cost. Selling price minus cost of acquisition should be redefined. Now, as of now, if you compute the selling price minus cost, in first case, it is going to come 50 rupees as loss. In second case, how much will be loss? 20 rupees loss. 80 minus 100. And in third case, it will be 20 rupees profit. So, profit, third case will remain profit. But the first two cases, losses will become how much? It will 0. They have given such a beautiful redefinition of the definition of cost. So, how is the cost redefined? For that, the government has given a separate section in the chapter of capital gains, which I have put here itself because we are discussing SLM depreciation. So we will address this issue here itself. See, on the board, they said you have to compute capital gains like this. Sale minus adjusted WDV. Okay. Now, what is adjusted WDV? Say this formula. WDV, add balancing charge, less terminal depreciation. This formula you have to use and find out the revised cost. Okay. Will you remember this? Please help me to get the adjusted cost in all the three cases. 1, 2, 3. Tell me the formula first. WDV, add balancing charge, less terminal debris. Is this the formula? We will understand the logic also why they have made so. Okay, first at least write down this formula. See on the board. Tell me, in first case, what is the WDV? Is there a balancing charge in first case? No, 0, correct? Is there a terminal depreciation? How much? 20. How much is the revised cost coming to? How much was the selling price? Capital gain 0. Are you clear? Second case, what is the WDV? WDV is 70 in all the three cases, correct? Is there a balancing charge in the second case? How much? 10 rupees. Okay, I will add 10 rupees. Is there a terminal depreciation? Both cannot happen in the same case. Correct or not? Therefore, what is the revised cost? What was the selling price? Capital gain 0. Are you clear? Third case, 70 plus 30. Balancing charge is only 30. It is not 50. Are you clear? Terminal depreciation 0. 100. Capital gains 20. It will work in every case. Okay, every case it will work. Wherever loss was coming, the gain has become what? 0. And wherever gain is coming, it is remaining gain only. Are you clear? They have not done any rocket science. It's a very simple logic. Please tell me, is this 20 rupees a benefit or disadvantage for you? Is it a benefit? Yes. So they will reverse this benefit over here while deriving the cost. Are you clear? How will they reverse the benefit? By reducing the cost so that your gain increases by 20. Are you clear? Is this 10 rupees a benefit or disadvantage for you? You are paying tax on this. So they will increase the cost by 10 rupees so that on capital gains you do not pay tax. Are you clear? So this is very simple logic. There is no rocket science is this. Okay. This 30 rupees is a disadvantage for you. Correct? You are paying tax on this. So they are increasing your cost by 30 rupees. Are you clear? So that there is no double taxation to you. Okay. Shall I change the numbers and will you be able to answer me the entire question once again? This example is there in your textbook. You may not write that, but I will change the numbers. Suppose we are buying an asset of say 700 rupees. Okay. The rate of depreciation, let's take as 10% and there has been 2 years. How many years? So in 2 years, how much depreciation? 140 you will claim under which section? 32 subsection 1 clause 1. Okay. So what is the WDV after 2 years? 560. Now I will randomly ask you anything. Suppose if I sell for 300, then what will happen? First, terminal depreciation, how much? 260. Now I want to compute capital gain also. Selling price, how much? 300 minus, shall I take the cost as 700? Tell me, I should take what? Adjusted WDV? Compute in your mind what will be the adjusted WDV. What is the formula for adjusted WDV? Say, WDV, add balancing charge, less terminal depreciation. What is the WDV? 560. Is there a balancing charge here? No. Is there a terminal depreciation? Tell me. 260. It will come to how much? 300 minus 300 will come to how much? It will be 0 rupees. Is it clear? If there is a loss, it will come to 0. If there is a profit, it will come to profit. Okay. Let's take one example of profit. For profit, I should take the selling price as how much? Tell me. More than 700. Okay, let's take any number. Let's take 900 rupees. Okay. Suppose if I am selling for 900, how much will be the terminal depreciation? Terminal depreciation 0. Balancing charge. Tell me. Whatever you have claimed depreciation, that will be reversed in the form of balancing charge. Correct? Capital gain. Selling price will be 900. Cost shall I take 700? Indirectly that will 700 only will come. Are you clear? Even, but still we will recompute. Okay? That will come to 700 only. WDV 560. Add 140. That will come to 700 and this will come to 200. Whether it is short term, long term, that is a matter of period of holding. Okay. So you can just see this particular thing from here. You have this example in your book also. Check it over here, please. Yeah. Which one? This last one? This example. Okay. This one or capital gains? Capital gains? Capital gains. You have to derive your adjusted WDV. What is the formula to derive adjusted WDV? WDV 560. Add balancing charge. So 560 plus 140 comes to how much? 140 is this depreciation, whatever you have paid as a balancing charge earlier. Okay. How much is the balancing charge? Whatever depreciation you have claimed earlier, that will be reversed in the form of what? Balancing charge. And here this is a benefit or disadvantage. It is a benefit or disadvantage for you? It's a disadvantage for you, correct? Because you are going to pay what? Tax on this. So that will be increased in the form of a cost. Okay. It is the same thing only. I am just changing the numbers. There is nothing new in this. Okay. That's the reason I changed the number. So that if I take some odd numbers, your mind should work in that also. Okay. Check this here. This is the original example. Okay. In this example, original, if we sell for 80 rupees, okay, then balancing is 10 rupees. What is over and above your WDV? Whatever is over and above your WDV, that will be considered as. But if your over and above goes beyond what you have claimed as depreciation earlier, okay, then your balancing charge will be restricted to how much? 30 rupees. Is it clear? Because extra amount has to go where? Capital gains. Okay. Will it make any difference? Yes, it will make any difference. What difference will it make? The tax rates are different, correct? In business and profession, you will be liable for say 30% tax. In capital gains, that depends upon long term, short term, as the case may be. Okay. The tax rate will make a difference. The total income will come to same only. Is it clear? So this cost has to be redefined. Where it is written? 50 capital A. That cannot be said by PGBP 28 to 44. Are you clear? Because it's a matter of capital gains. That has to be given between 45 to 55 only. You had this also in CA Enter. I don't know from which institute you have done CA Enter. It was there, na? CA Enter. Shall I go ahead? This provision, honestly speaking, they have not asked in the exam very commonly, because you will yourself understand that this is applicable to whom? Is it going to be useful for us in our day-to-day life? No. Only unless and until you are doing a tax audit of And there are very few power generating companies in this country. Yes or no? So day to day life, you're not going to be using this particular depreciation much. Focus more on 3212. That is more important. I have told you earlier also. One last thing we will see for the day. Pay attention. Don't be happy that one last thing means it will be completed in 5 minutes. It will take 35 minutes. Okay. What is that last thing? Now, this last provision is extremely important for exam. Mark it down, please. 43A. Please mark down in your books. This provision, left hand side. Very important. Right hand side, not much important. We will do left hand side today. Right hand side, we will do tomorrow. Left hand side, extremely important. Many times, almost every attempt, will ask you one small adjustment on this particular point. So try to understand what exactly this section has to say. 43A, pay attention please, all of you. Honestly speaking, this is not directly related to depreciation, but indirectly this concept is related to depreciation. That is the reason we are doing this over here. This section is applicable if you import an asset. The asset is imported. Plant, machinery, furniture, whatever it is. Okay. Plus, this is the first condition. Second condition for this section to be made applicable is there is a foreign currency loan on it, or the foreign creditor has given you credit. So I bought a plant and machinery from Germany and I took a foreign currency loan. Or the creditor himself has given me the credit. Both the possibilities are there, correct? Now, whatever he is doing, that is done in the foreign currency. So let's take an example that I bought a plant and machinery of furniture of $1 lakh, and there is a loan of $1 lakh on that furniture. Now the law says that if you import an asset and if there is a foreign currency loan, then whatever exchange difference comes on the date of payment shall be adjusted in the WDV of the block of asset. Don't take it to P&L account. Okay. For example, I bought a furniture of $1 lakh today. Today the rate is 80 rupees, $1.80. After 6 months, when I'm paying, say $20,000 I'm paying, at that time the rate of the dollar has become 90. So am I incurring 10 rupees loss on every dollar? Is that an extra cost for me? It has to be added to the WDV of the block of asset. Okay. And vice versa. Is it possible that if tomorrow very less possibility, but still, tomorrow the dollar rate has fallen to 70 rupees. Okay. I'll give you a complete example of 3 years. I'm just saying orally once. We will make a complete example of 3 years now. But at least let me speak the provision once. I bought the asset at that time. What was the rate of dollar? 80. Now after 6 months, I'm paying $10,000. At that time, the rate has fallen to 70. So is there a gain on payment? How much? 10 rupees into $10,000, 1 lakh rupees is the gain, correct? I need to reduce from the block of asset. Are you clear? One important thing that you need to keep it in mind, that the adjustment of foreign currency gain or loss has to be made on payment basis. Unlike what you do in your accounts on 31st March. Are you clear? Don't make adjustment on 31st March. Make on, if you pay more, add. If you pay less, reduce from the block of asset. Let us take one example. See on the board, please. This is previous year 25, 26. On 15th of June 2025, you are importing a furniture. On that day, the cost of the furniture was $1 lakh, and on that day $1 was 80 rupees. Okay. Now we all know the rate of furniture's depreciation. So the actual cost today will come to how much? 80 lakhs. I will recognize as per today's rate. Tell me please. So I recognize as per today's rate. Now no repayment was done during previous year 25-26. Okay. So I will not do any adjustment. At the end of the year, I will claim what? Depreciation at the rate of 10%, which is 8 lakh rupees. Correct? 72 lakh will be my WDV on what? 31st March 2026. 1 year has gone. Okay. Second year, I am starting. Previous year, 26-27. Opening WDV is how much? 72 lakhs. Now, suppose on 15th of June 2026, I paid $30,000 to the bank. Okay. At that time, the rate of $1 was equal to, say, 90 rupees. So, is there a loss on payment? How much loss? So, that is an extra cost for you. So, now on payment, there is a loss. On payment, the loss and gain has to be on payment basis, not on 31st March. Okay. Don't check what is the rate on 31st March. That you do in accounts, please, not in tax. So, loss on payment, how much it is? 3 lakh. Therefore, my revised WDV will come to how much? 75 lakhs. Now I will claim what? Depreciation of 7.5 lakhs. This will come to 67.5 lakh, and this will be my WDV on 31st March 2027. Okay. Now third year. Previous year 27, 28. Let's take the opposite of what has happened in the last year. Opening WDV 67.5 lakhs. Now again on 15th June 2027, I paid say $40,000. When I paid this, $1 was equal to 70 rupees. Let's assume it has fallen. So what is happening now? There is a gain on payment. So I have to reduce from the block of asset. Gain on payment. How much it will be? 4 lakh rupees. Therefore, my revised WDV will be 63.5 lakhs. From that, I will reduce what? Depreciation of 6.35 lakh. Whatever is the amount, that will be called as WDV on 31st March 2028. And this story will continue till the time you don't complete the what? Repayment of the asset. Okay. You just write down this example. Give the heading example on section 43A. The section is very small, very straightforward. You can check this over here. I have very clearly written in the book, no adjustment should be made on 31st March. Right hand side we have not seen today, that we will see tomorrow. Okay. Left hand side we have seen. Left hand side is more important. Right is not more important. This comes more in the examination. यानी इसको कल से ना थोड़ा आगे ले है ना, अभी मत करो, दिखता नहीं, फिर रहने दो, लूज हो जाएगा. Done, all of you? Now we are done with the depreciation almost. One last part is there, that is 43 AA that we will do tomorrow. Close your books, please, fast. Now I will randomly ask any question in between from depreciation. Ultimately, we need to randomly answer the things. Okay. We are working right now so that after a week, when the chapter is over, we should be ready for what? The questions on business and profession, which are around 32 to 33 questions are there. Some individual questions, some total income questions. And once the entire batch will be over, for 20 to 25, 25 to 30 hours, we will be doing papers. Okay. So we need to be randomly knowing the things, not in the order of the book. Anything can come out of the book in the exams. Volume is one of the biggest problem of DT. DT is not difficult. It is the volume which is going to give you a kind of pain. So if I purchase an asset for 10 lakh rupees, okay, I'll make stories now. Okay. Your paper is also a story only. You have to just understand which provision they are trying to test you. I purchase an asset of 10 lakh rupees from Arun. The market value of that asset is 12 lakh rupees. I purchase for 10 lakh. What will be the actual cost? It will be 10 lakh only. What is wrong in that? Correct? Yes or no? Now, if I purchase the asset for 10 lakh, market value is 4 lakhs. Then what will happen? The assessing officer will come into picture, and what will he do? He will himself decide the mark. He will joint commissioner, correct? He will take the prior approval of joint commissioner, and then he will determine the actual cost. Where it is written? Explanation 3 to 43.1. Excellent. What is the priority to set off your losses, your UAD, and your depreciation? Current year depreciation first, then business loss, then unabsorbed depreciation against any income except salary income. Okay. Then comes the next question. I sold, I'm Mr. A, I sold the asset to Mr. B, Mr. B sold to Mr. C, and Mr. C again sold back to me. What will be the actual cost in my hands? WDV at the time of first transfer, compare with repurchase price, whichever is where it is written. Which explanation? Fourth explanation to 43.1. I bought an asset, and if in that asset, I am a hotel businessman, restaurant, following composition scheme. Which scheme? In GST. Little bit GST, I know. Okay. Composition scheme I am following, and I am purchasing a kitchen equipment. Okay. On that I paid some GST also. What should be my actual cost? Including GST, excluding GST? Including, because ITC is not available only to you. Correct? You cannot claim ITC. You have to take including GST. Okay. Then next question. Let me check. I am engaged in power generation. Will I be eligible for? I'll tell you how minute the things are today. We should not go into so much of depth, but still I am trying to tell you one important thing. I am engaged in power generation. Do I have both the options of SLM and WDV both? Yes. If I follow SLM, will I get additional depreciation? No. If I follow WDV, will I get additional depreciation? The answer is yes. Shall I go ahead? Second question, you can see the textbook, not the color book. You can see the textbook and answer. Okay. I am engaged in transmission of power. What? Of power. Do I have both the options? Go and check, please. First, check additional depreciation section. Okay. In additional depreciation section, is only transmission of power assessee covered? Covered? Yes or no? It is covered? Yes. Now go to SLM depreciation in your textbook itself. It will be at the end of the chapter, last 3-4 pages. You can check this page, page number 2.20. You can read this paragraph if you want. Is it available if you are only engaged in transmission of power? Read carefully. Tell me. No. Most of the students will misunderstand that the nature of business mentioned in 32.1.2a, and here it is not same. Okay. Here it is very clearly written what you are supposed to be engaged into. Either generation or generation and distribution also. Are you clear? But for additional depreciation, if you only what? Transmit the power, supply the power to different people's house or offices or factory, you are eligible for that also. I am not saying the ICI will get into this much of depth. But I am telling you, this is how minutely the law has been made. Are you clear? This is how minutely the law has been drafted by the government. It is written generation or generation and distribution. There is no mention of only transmission of power. Correct? But in additional depreciation, you have that third activity also. Is it clear? Close the book. I'll ask you some other questions now, which are relevant for exams now. I am showing this because some students ask me after a few months, okay, such doubts. So it is my duty to address here itself, okay? Because when you will sit and study in depth now, here you are not getting much time to think now, obviously, in the class. But in the study leave, you will study for 10, 15 days, 20 days, direct tax. So at that time, you will think a lot. So for that purpose, I am just telling you whatever doubts earlier students have asked me, that I am trying to address you all. Next is, if I am engaged in printing, will I be eligible for additional depreciation? Yes. Will I be eligible for a computer which is used in office for additional depreciation? No. Will I be eligible for a motor vehicle which is used within the factory for additional depreciation? Commonly known as what? Forklift trucks. It will be used in the exam as this word, okay? Then I hope you know what do you mean by the term owner. Tell me fast. Yes. Beneficial owner. Where it is written? Case law is there. Supreme Court judgment is there, okay? Mysore Minerals Limited. If you receive an LPG subsidy, what is the treatment? Not an income. If you receive a subsidy with respect to an asset, reduced from the block of asset, okay? If you receive a subsidy with respect to a revenue item, it will be added to your income statement, okay? Section 224(18). Section, leave it, even if you write just 224, that is okay. If you receive subsidy as a compensation from the government for some losses in your business, when it is taxable, when it is receivable, correct? In case of amalgamation, do the amalgamating company gets depreciation in the year of sale also? How will you compute depreciation? As if no amalgamation has taken place. And then, proportionately, you will take on the basis of number of days the assets are used by both of them. Okay. What will be the cost in the hands of the amalgamated company later on? WDV in the hands of the amalgamating company. Whatever assets are coming from there, whatever is the WDV there, put it in your block. Are you clear? If I buy an asset from Andhra Pradesh, but I take a foreign currency loan, okay, whether 43A will be applicable? No. For 43A to be made applicable, imported asset and there has to be a foreign currency loan. So in this case, what has to be done, that we'll see tomorrow, okay? That if you take an asset from local area and if you take loan from foreign currency, then what has to be the treatment of gain and loss, correct? That is given in 43AA, okay? That we have not seen so far. So I think so most of the things you are remembering as of now at least, okay? I hope that will continue for the next lectures also. So let's go ahead with the last part of depreciation. So we have seen section 43A. What does section 43A speaks about? It is not directly related to depreciation, but yes, it is indirectly related to the block of asset. That if you import an asset and if you take a foreign currency loan on it, then you have to adjust the gain or loss on payment, not on balance sheet date. On payment in the WDV of the block of asset. If there is a loss on payment, add. If there is a gain on payment, reduce. Okay. Now we need to understand that the forex gain or loss may come on many other items. Okay. It may not only come upon importing an asset. It comes on many other things. Like if I sell goods to some outsider, if I export some goods and if I am about to receive the money in dollars, will there be a forex gain or loss? Yes. If I purchase something from some raw material, etc., not asset, but raw material, and if I am going to pay after a few months in dollars, again, will there be a gain or loss on payment? Yes. There can be many other gain and losses, like, have you heard about forward contract? Yes, in your AFM. Can there be gain or loss in forward contract also? Tell me. Now, all those things are not covered in 43A, correct? 43A very specifically speaks about only one case. You import an asset and you take a foreign currency loan on the same, then the gain and loss will be adjusted on the date of payment. 43 does not talk about other losses, which I told you just now, like the loss on purchase of raw material, loss on sale of stock, loss on forward contract, gain on forward contract. Similarly, I have a branch in foreign country. So I have to merge the accounts of that branch with the head office accounts. So the branch in the foreign country would have been maintained in foreign currency. Now I want to merge that branch to my Indian head office balance sheet. So you might have done this accounting in your CA Inter. That merger of a branch with head office books of accounts. So if the branch is in foreign country, it is in dollar. If I want to merge that with Indian books of accounts, I need to convert that into what? Indian rupees. Even then there can be some gain or loss, correct? So there are numerous gain or loss apart from what we have done yesterday. One more example coming out of this only. I am buying asset from Andhra Pradesh, but I am taking foreign currency loan, which I told you yesterday also. Can that come over here in 43A? No, that cannot come in 43A. So what shall we do about other gain and losses which are other than 43A? Any forex gain and loss which is not covered in 43A, what shall I do? So for that purpose, the government has brought a new section few years back, 43AA. Okay. Now, what are we supposed to do in 43AA is exactly similar to what you do in accounts. What do you do in accounts? You record transactions in account in 3 steps. First, on the date of doing the transaction. I am selling you goods of $1 lakh today. I will pass journal entry, debtors account debit to sales. $1 lakh into whatever is the rate today, correct? Then on 31st March, I will restate my dollar. If it is increasing, then I will increase the data. If it is decreasing, I will decrease the data, correct? Then in the next year, when I will settle the payment, at that time again, I will check whether there is a gain or loss, whether there is a change in the rate. That same thing you are supposed to do in 43AA. So except one case, that is 43A, in all other cases, which is going to come in 43AA, if there is a gain, you take to P&L, credit side. If there is a loss, take to the P&L, debit side, claim it as a expenditure. Okay. But the only thing which the law has said over here, that the gain and loss has to be considered as per the rate. Exchange rate has to be as per ICDS. As per what? ICDS. The exchange rate will be not your exchange rate. It will be the exchange rate given by whom? And ICDS gives an exchange rate of, you might have heard one term in your CA Inter. It will come again and again in CA final. That is known as telegraphic transfer buying rate. Have you heard about this word? ICDS talks about you should convert as per telegraphic transfer buying rate. What is telegraphic transfer buying rate? It is nothing but the exchange rate given by the State Bank of India. By whom? The term telegraphic transfer buying rate is defined under income tax law. It says that TTBR means the exchange rate given by whom? The State Bank of India. Let's read this right hand side 43AA. What does 43AA has to say? Any gain or loss other than what? Other than 43A, that is already covered over here. Are you clear? On account of change in foreign exchange rate shall be income or loss as per ICDS 6. Okay. If you want, you can write down here as per ICDS, we should take SBI rate, that is TTBR. As per ICDS, we should take SBI rate, that is TTBR. So what shall I do? Record the transaction as per the rate on the date of transaction. Okay. Then restate on what? 31st March, whatever is the rate. If it is increasing, book the gain. Madam, online madam. Please. Anna Priya. Please. Mute, please mute. Or at least speak in English so that we shall also understand what you are speaking. At least we should understand what you are speaking. Correct? Here, please. Now, there are some examples over here. These are just illustrative examples. There is no exhaustive list. Every gain or loss will come over here except everything will come except 43. These are just illustrative examples for you. The gain can be on monetary item, non-monetary item. The gain can be on forward contract. The gain can be on translation of financial statements of foreign operations. When you convert the foreign operations financial statement into your Indian operations, merge with India. Foreign currency translation reserve. You can write many other items over here. You can add one more item over here if you want. That if you purchase asset from India and take a foreign currency loan, that will also come over here. Okay. Is it clear? Now there is an ICDS over here which talks about how to initially recognize, how to recognize on balance sheet date. Okay. Similar to what your accounting standard also says. Let's see this. Suppose today I purchase or if I sell some goods of $1 lakh, what journal entry I will pass today on the date of transaction? I'm selling goods of $1 lakh today. What credit sale? What journal entry I will pass? Debtors account debit to credit sales account. $1 lakh into whatever is the rate today, I will convert as per that. Suppose the rate today is 80 rupees. So 1 lakh into 80 will come to how much? 80 lakhs. So this is what it wants to tell us. Check. First, initial recognition should be recorded as per the rate on the, tell me fast, on the date of transaction. Okay. Now the government is also giving you, the institute is not institute, the government. ICDS is brought by the government, not by the institute. The accounting standards are brought by the institute. The government is giving you one option on the right hand side. You can take average rate for a week or a month, may be used for all transaction during that period. If you are doing multiple transaction with a party, okay, again and again you are selling, again and again, every day you are selling 100 times. In a week you are selling for 1000 times. Then you can take one average rate, okay, of the entire week, because the rate changes on a very moment, na? Every moment the rate changes, correct? Right now the rate is 80. After half an hour it will become 80.1, correct? Then after 2 hours it will become 80.5. So who will take so much headache of recording transaction as per the exact rate? So the government is giving you option. You can take an average of the entire week. Okay. Take an average. Record the entire week's transaction based on that single rate. But if the rate fluctuates, what? Significantly, it is changing because of some economic activity which is happening in the world. Mr. Trump is announcing some or the other thing every day. Okay. And because of that, suppose the rates are fluctuating significantly, then don't take average. Then take what? Rate on the date of what? Transaction. So you have an option to take average rate only if the rate is stagnant or it is minor changes there, then it is okay. Check it, please. So this is what you are going to do on the date of initial recognition. Then on, obviously on 31st March on closing rate, on the last day of the previous year, you are going to what? Convert and recognize whatever is the income and loss to the P&L account. Here also they are saying if the closing rate is what? Unrealistic. What value we have recorded the debtors? Tell me. 80 lakhs, correct? Now suddenly something unique has happened on 29th or 30th of March, okay, which is temporary in nature. We all know that is going to come back. Because of that, the dollar prices have increased to what? Say 110 rupees. Suddenly, some war has happened or something has happened. Now that is very unrealistic. We are not going to pay 1 crore 10 lakh rupees to the other person. Are you clear? Then you should not record at 110. You should record at an amount which you are likely to disburse. How much you are likely to disburse? 80 lakhs. Okay. So you should record according to that. Check it, please. Realized if you want to receive, disburse if you want to pay. That's the reason they are using two words over there. Okay. In case of sale, you will realize. In case of purchase, you will disburse. So on 31st March, convert as per closing rate. If the closing rate is unrealistic, then whatever amount you are likely to receive or likely to pay, record as per that. Okay. For non-monetary items, record as per the rate prevailing on the date of transaction and then revalue on the closing date the way you do for all other things. Okay. So it is more or less similar to what is your accounting standard 11 talking about. It is somewhat similar to that only. They are giving you just one extra option. That is this option. I don't think so. Your accounting standard gives you this option to take what? An average rate for a week. And again, you can write it over here. The rates which you are converting has to be which rate? SBI's TTBR. Just write down here also. Okay. So here we complete the discussion of depreciation except few explanations which we have left. I know that. Explanation 1, explanation 1A, explanation 6, okay, explanation 12, 13. These are the explanations we have not done so far in section 43.1. Some of them will come in today's lecture. Some of them will come in the chapter of capital gains. Now, where we stand as of now? As of now, we stand over here as far as your PGBP is considered. You can see this page on the board. You may not open the book. It's okay. See on the board. We are standing here, correct? And out of all these sections, we only know as of now section what? 32. Okay. This is the only thing which we have done so far. But no doubt with this section, we have seen many other sections like 43.1, 43.3, 43.6, so many explanations, correct? Unabsorbed depreciation, 32 subsection 2, correct? 43A, 43AA. So many things are covered along with this. Okay, it is not that it is only talking about one section. We will talk about some other small sections now. These are very small sections, section 30, 31, 36.1. These are also available to all assessees who are engaged in any kind of business and profession. Once this is done, then we will go to sector wise. So let's talk about section 30 first, then 31, and then in 36(1) there are many small clauses. 36(1) has many deductions. Let us talk about section 30 now. Pay attention on the board, please. Section 30. This section talks about 4 expenses. 4 expenses with respect to building used for business and profession. The 4 expenses are rent, rates and taxes, repairs, and insurance of what? Of what? Building which is used for what? Business or profession. The best example can be this building, correct? This building is owned, obviously, so the question of rent will not arise. Okay. If this building is rented, then rent will also come. If there are any repairs, etc., repairs they can claim in mastermind. If they have taken insurance on this building against fire or damage or destruction, they can claim the premium deduction also. And if obviously they are paying some municipal taxes, etc., to the local government, then they can also claim that also. Okay. So let us segregate this into 2 parts. That if you are an owner of a building, then what will happen? And if you are a tenant of a building, then what will happen? I am an owner of this building and I am conducting my business and profession. Then obviously I will not get the deduction of what? Rent. Whom will I pay rent? Yes, it is my own building, correct? But if I am a tenant of this building and I am running my business, then I will incur all 4 expenses. I will incur what? Rent also. Is it clear? So the owner will get 3 deductions. The tenant will get all 4 deductions. The owner will not get the rent deduction, obviously. Second expenditure, rates and taxes. Rates and taxes. It is allowed only if I pay. It is allowed on paid basis under section 43B. You might be knowing there is one section which is going to come later on in this chapter itself, that certain deductions under income tax law are allowed on what basis? Payment basis, and taxes are one amongst them. Yes or no? See, for rent you can claim deduction on accrual basis. Okay. Rent account debit to outstanding rent. You will get the deduction. But for taxes, you are not going to get the deduction on accrual basis. For taxes, you have to pay the taxes. Unless and until you pay, you are not going to get it. The tenant can also pay taxes. Tell me, whomsoever is bearing the burden of taxes, that person will claim the deduction. So if I am a tenant of this building and if I am bearing the taxes, the owner is saying that you have to bear the tax also. I said, it's okay, I'll pay. So if I am paying the taxes, then I will get the deduction again only on payment basis, not on accrual basis. Third expenditure, insurance. Allowed? Allowed. You are paying some insurance premium to secure your building. You can claim that also. Fourth and the last expenditure is what? Repairs. Now, repairs are allowed only if the repairs are revenue in nature. What kind of repair? Revenue. Revenue repairs are allowed under section 30 itself. Revenue repair, you are making some minor changes, okay? The door is not closing properly, so we have brought one person, carpenter, to told him to repair the door. He took some money. That's a revenue repair. The ceiling is falling little bit, so we brought a person and we just fix it up. Okay, it's a revenue repair. Now they are planning to build another floor on this building, for example. Then that is not revenue, that is capital repair. Okay. Capital repairs are not covered in section 30. For capital repair, you need to do one thing. You are the owner of the building. You want to make one floor on this building. Suppose the cost of making that floor is 20 lakh rupees. Okay. You add that 20 lakh rupees to what? Block of asset and claim what? Claim depreciation. Are you clear? You will have this building in your balance sheet or not? In the block of asset in income tax, this building will be there. Add to the block capital expenditure. Claim what? Depreciation. Now, one very unique case, but we cannot ignore this case. It is very rare possibility to happen like this, but it may happen. And the law has to speak about every possibility. Just think like this. I am an owner of a building. You are a tenant. Okay? You have taken the building on rent from me. You are conducting business in that building. Okay? You will pay rent to me. Will you get the deduction of rent? Under section 30, right hand side. Correct? If you do any revenue repair, will you get the deduction of revenue repair also? Yes, under section 30, right hand side. Correct? Now, you are planning to be in this building for a long term. Okay? For at least 10 years. Now, you are coming to me and telling that this space is not enough for me. I want an extra floor. Okay? So, I as an owner said that I am not interested in making a extra floor. If you want to make, you can make. Okay? So, you are a tenant of my building. Now, you are incurring 20 lakh rupees what? Capital expenditure on somebody else's building. Very rare. Yes? Nobody will do this. But there is a possibility it may happen. Correct? We cannot negate this possibility. So, if the tenant is doing what? Capital expenditure on whose building? Owner's building. So, whether the tenant will be eligible for depreciation or not. Now, listen, don't make any conclusion, please. Let me make conclusion. See, if a owner makes a capital expenditure, then the owner can add that expenditure to the block of asset, correct? But do you have that building in your balance sheet? No. You don't have the building itself in your balance sheet. The building is mine, not yours, correct? But the law is going beyond the imagination and giving you one deemed benefit. The law is saying that if a tenant incurs capital expenditure, okay, then it is deemed to be building of the tenant. What it will be considered? Deemed to be building of the tenant, and the tenant can claim what? Depreciation on the same. Come to the book now, please. You can check this now. Page number 1.12, and this is the point which I am speaking about. So left hand side is owner. Owner will get which deductions? Rates and taxes, revenue repair, insurance. Correct? And capital repair should be added to the cost of asset and he will claim depreciation. Correct? Tenant will get which deductions? All four of them. Correct? You can circle rent also is an extra point over here. Okay? Which the owner will not get, obviously. Then comes this point, deemed building. Correct? And then comes this point which I have told you that rates and taxes will be allowed on what basis? On payment basis. If you pay, you will get. On accrual basis, you are not going to get. Rest all expenses you can claim on accrual. Insurance you can claim on accrual. Rent you can claim on accrual. The third one is repairs also you can claim on accrual. No need to pay. Are you clear? I would like to discuss little bit more with respect to this deemed owner concept. My building, you are incurring 20 lakh rupees. Okay. Will you get depreciation on that? Tell me. Yes. 10% depreciation you will claim every year. Now say after 5 years you are leaving the building. Okay. Who will get that extra floor? Tenant will take away with him. Huh? How will you take that extra floor with you? Who will get that extra floor? The owner will get that extra floor? You have to leave and go now. How will you take that immovable property with you? Yes or no? Now, as a common sense, you would have told the owner at the beginning that I am doing a very big investment in your property. When I will leave, you have to pay me something. Tell me now, please. So there is an agreement between both of us that when you will leave, I will pay you say 10 lakh rupees. Okay? How much? 10 lakh rupees. Isn't this a transfer of a block of asset from you to me? Tell me now, please. Yes or no? For which you are getting how much money? Will you not be liable for short-term capital gain or short-term capital loss? Please tell me. Yes. In the year in which you will leave the property and take the money from me, the money which you took is a sale consideration. The property which you left is a transfer of block of asset, correct? And you will be liable for short-term capital gain or short-term capital loss. Let's take one example on this, which is there in your textbook. Depreciation is not going to leave us so easily. Okay. Page number 2.4. Explanation 1 to 32.1. This is the explanation which is written in your color book also, correct? Which talks about if a tenant does a capital expenditure, that the tenant will be considered to be the deemed owner of the building. Read it. Where the business or profession of the assessee is carried on in a building not owned by him, but in respect of which he holds a lease or any other right of occupancy, and any capital expenditure is incurred by the assessee for the purpose of business or profession on the construction of any structure or by way of renovation, extension, improvement to the building, then such capital expenditure will be treated as building what? Owned by the assessee. Who is the assessee over here? The tenant. And he can claim depreciation. Now there is an example below. Mr. X is a tenant in a building in which he carries on business. On 31st December 2023, he incurs 4 lakh rupees expenditure on constructing of a room to be used as office. Now this is a capital expenditure. Now when is he incurring this expense? On 31st December 2023. On 29th November 2025, that is after 2 years, he vacated the building and receives the following amount from the landlord. This will be sale consideration on vacation, correct? So in the first year, how much depreciation you will get? Half of 4 lakh rupees, okay? Because you are putting to use in the month of December. So that will come to 20,000 rupees. Yes? So first year 4 lakh is your actual cost, your depreciation of AY 24-25, PY 23-24 is 20,000. Is it clear? 3 lakh 80 is your WDV. Second year AY 25-26, PY 24-25. You will claim 10% depreciation. After 2 years, your WDV is how much? 3 lakh 42,000 rupees. Are you clear? Now, after 2 years, you are vacating the building and the landlord is giving you how much? 2 lakh 40. And what is your WDV? 3 lakh 42. So there is a short-term capital loss of 1 lakh 2,000 rupees, check. And in the second case, there is a short-term capital gain of 1 lakh 58. Check it, please. Is it clear? Now, again, I am saying this arrangement is a very rare of the rarest case. Okay, no tenant, a tenant even is not even ready to do a revenue expense on the building of, say na, owner. He will tell the owner only, see, this is not working properly. Please make it proper. Correct? Forget about incurring what? A capital expenditure. Okay. But there is a possibility if the tenant is in need of the property, he is not getting any other property, his business has been very well established in a particular property, then he may incur the capital expenditure also if he wish to continue in long run. Okay. Otherwise, this is very rare of the rarest possibility. That is the reason this point is not very important for exam. Okay. Anyways, this is your first section. So the sections from here are in at least till 36 are very small. Then the sector wise deductions are again going to be the big one. The next section, section 31. Pay attention on the board. This section covers repairs and insurance of plant, machinery and furniture. Okay. Again, the repairs are supposed to be what kind of repair? Revenue repairs and not capital. Okay. If it is revenue, you will claim the deduction. If it is capital, you will not get the deduction. You can capitalize and claim depreciation. Okay. What is missing over here? What is missing over here? Rent. Can I take plant and machinery and furniture on rent for my business? Yes, that is not covered here. Sir, where it is covered? There is no specific section for that till 36. Then what is the last option? Tell me. 37.1. You can go there. Whenever we will do that, we will test the condition, whether we are fulfilling the condition. You can claim under 37.1. But under 31, it is not there. Okay. That is something which is very clear. You can check the next section. It's a small one. We can go under 37.1 and we can check over there. But in 37.1, you have to fulfill lot of conditions. Okay. Now, these sections are not going to come for full-fledged question. It will be part of your sums. Okay. In the PGBP question, you will be given a P&L account. On the debit side, you will find these expenses. You have to say it is allowed. You have to write a note on the same. Okay. In the answers. Then 33 is a sector wise. We will see post our breakfast. 34 is omitted from income tax law. I have told you earlier. 35 is also sector wise, scientific research and all. So we are directly going to 36 now. Okay. In 36, there are a lot of small clauses. The main section is 36.1. At least remember this if you don't want to remember the sub clauses. Okay. At least remember that the section is 36.1. Now, what is the first clause over here? These are clause numbers. 1, 1B, 2. The first clause is again insurance. Now, insurance of what? Tell me. Stock. In the previous two sections, we have insured our fixed asset. Correct? Now, we are insuring our stock against damage, destruction, etc. If some flood comes, okay. If some ants and etc. are destroying your what? Stock, etc. So, you need to insure your stock. And if you pay the premium, you will get the deduction. Then comes, you are an employer and you are paying what? Health insurance for your employees. Okay. So, if I am an employer and if I pay health insurance for my employees, then that is also allowed as a deduction for me. But it is what? You have to make the payment by what? Other than cash. The insurance ends here. Then now there is no other section which is going to come for insurance. There are only 4 sections specifically defined in the income tax law for insurance. One is 30, 31 and these 2 sections. 30, 31 insures what? Fixed asset. The first one insures what? Stock. The second one insures what? Employees. Okay. Apart from that, there are many other insurance policy which you purchase. Those are all personal policies. Correct? Life insurance policy we purchase or not? That is personal. That you can go and claim under ATC. Yes or no? Health insurance purchase you purchase for yourself. Mediclaim. Tell me. That is 80D. You can go and claim in chapter 6A. Correct or not? Why that has been put in chapter 6A? Because securing your life for your family should not be only reserved to business associates. Correct? That is the right of every associate. Yes. If I am doing a job, do I have a right to secure my family or not? Yes, I should also get deduction under chapter 6A. Yes. So chapter 6A deductions are not limited to any head of income. So right now we are interested in the deductions which are restricted to PGBP head. Next we will see deductions which are restricted to capital gain. Next we will see deductions which are restricted to IFOS. After all are done, we will see the common deductions which are available to everybody. That is under chapter 6A. Okay. Third section. Bonus commission paid to employees. This is also subject to what? Payment basis. If you pay, you will get the deduction. If you don't pay, you will not get the deduction. So how many expenses so far has come which are allowed on payment basis? We'll make a count of them. Later on, we will do 43B in detail. Don't worry. But at least while doing the deductions also, we'll make a count. 2 deductions. Rates and taxes and bonus and commission. Okay. Now, there is something written after that. That is very technical. We need to understand and analyze this line. However, where sum represents profits, then not allowed. Now, what do I mean by this sentence? Listen carefully. What people used to manipulate earlier, that the government was forced to put this line. See on the board. There is a private company, A Limited. There are 4 shareholders in the company, A, B, C and D. The percentage of shareholding of all 4 of them is equal, 25%, 25% and 25%. Out of the 4 shareholders, the last 2 are employees also. So these 2 are shareholders plus they are also the employee of the company. Okay. Now just try to see how I am manipulating the things over here. The time has come to give them dividends. Okay. So the company has declared dividends and now the company is paying them dividends. The company is paying 25,000 as dividend to first shareholder. First of all, I would like to ask you, is dividend under income tax law allowed as an expense? Allowed as a deduction? No, it's not allowed as a deduction. It's an appropriation. It's not an expense. Are you clear? Yes. Dividend is not an allowable item. Are you clear? Yes. So this 25,000 which you are paying to the shareholder is not going to be allowed under PGBP. Now what the company is doing, they are paying 25,000 to the first shareholder. They are paying 25,000 to the second shareholder. Now, the third and the fourth shareholder who are employees of the company, they are paying 5,000 to them. How much? And then they are saying what? We will give you 20,000 as what? Bonus. Why so? They can claim that 20,000 rupees as what? Deduction. My question is very simple to you all. If 4 shareholders have equal shareholding, do everybody deserve to get same dividend? Yes, there cannot be any difference. Dividend is a proportion of your shareholding, correct? If I hold 10% shares, I should get 10% of the total dividend, correct? If I am holding 25% share, why I am only getting 5,000? Because 20,000 you are manipulating, you are changing the head of expense and you are showing that as what? Bonus. This bonus is nothing but, it's a distribution of profit. Yes or no? Does this 20,000 rupees represents the profit of the company? Please tell me. That will not be allowed to you. If this amount would have been 60K and 60K, then we would have allowed 40,000 to you. Are you clear? Then we would have said out of 60,000, 20,000 represents profit. Are you clear? And 40,000 represents genuine bonus. Are you clear? But now it is not going to be allowed to you. Please write down this example there, please. Put an asterisk over there, write down in the notebook 36(1) subsection 2, subsection 1 clause 2 and then write down this. So how many expenses we have done so far? While writing only you can say. So far in 36, in 30, 31, 36, total 5, correct? If you are further bifurcating rent, rates and taxes separately, then it is more than 5. You can just write down below this. This will not be allowed as deduction. Written? So how many expenses we have seen so far? Small, small. First, first, please say with respect to building. With respect to building, which expenses? Rent, rates and taxes, repairs and insurance of building, correct? Then with respect to plant machinery, repairs and insurance, okay? Then with respect to insurance of stock, insurance of employees, and then bonus and commission, but bonus and commission allowed on payment basis, okay? Now let's move on to one of the most common section that every business, almost every business has claimed, and every business should claim this. This is one of the reason that you are doing business, to take this great benefit which a normal assessee will not get. And that is section 36, subsection 1, clause 3. That is interest on borrowed capital. So in this section, you are going to get deduction on loan you take for what? Business and profession. You have to fulfill 3 conditions. Pay attention on the board, please. The 3 condition is you have to borrow capital. It has to be borrow capital. Borrowed capital means something which has to be repaid. Correct? It is not equity or preference. Okay? It has to be loans. Second, it has to be used for business and profession. And the third condition, you need to pay some interest on it. Interest is paid or payable. I'll speak about each and every aspect. There are a lot of things to speak over here. Before that, I have few questions to all of you. General questions. What do I mean by that I should use the loan money for business and profession? What will it include? Give me some examples. Purchase of asset. Step one by one we will talk. I heard purchase of asset. Can I claim deduction of interest if I take a loan for buying an asset? Yes. What about if it is not put to use? Tell me, we have already done. Then we have to capitalize. Once it is put to use, then can I take it to P&L account? Okay. Purchase of asset used for business and profession, I can claim. Second, working capital for raw materials, etc. Correct? For paying salaries, etc. Correct? What else? If anything comes to your mind, or else I will give you some examples. You have to think and tell me whether it will qualify as use for business and profession or not. Okay. Shall I? I took a loan for paying income tax. To pay what? Did you understand my question? One of the most famous adjustments of ICI which you will see in the paper. I took a loan for paying income tax. It is there. All these adjustments are mentioned in your book. Don't worry. I will not directly read. If I directly read now, you will not remember for a long period of time. That's the reason I never ever teach from book direct. I write everything on the board and then we can read it from the book. That you will remember for a long. You have to think. If you think, you make mistake, you listen, then you remember for a longer period of time. My question is very clear to all of you. I took a loan of 10 lakh rupees because I want to pay advance tax. Okay. Due dates are coming of advance tax. I don't have money, but taxes I have to pay. Correct? I want to pay income tax in advance on 15th of September or 15th of December. So on that 10 lakh rupees, I am paying interest. Whether can I say that I am using that money for the purpose of business and profession and claim that interest as deduction? You have done tax audit. You are tax auditors. Okay. You should be able to answer this question. Yes or no? Not allowed? Allowed? There is a mixed review. Not allowed? Allowed? There is a mixed answer which is coming. Now let me tell you the correct answer. And the answer, it is not allowed. Why? Income tax is considered to be a personal tax. What? It's a personal tax. It's your personal liability. Okay. Is the income tax itself allowed as a deduction under PGBP? Tell me now, please. Not allowed. Specifically disallowed. So if you take a loan to repay an item, which itself is not allowed. Are you clear? That item itself is disallowed under PGBP. Income tax. You report in the tax audit report. Correct? That this much is the income tax which is disallowed. It's considered to be a personal liability. Income tax payment is a personal liability. The tax liability is not allowed. If you take a loan to repay that particular liability, then that interest is also not allowed. Second question. If I take a loan of 10 lakh rupees to pay my GST, tell me please, confident, it is allowed? Sure. 100% sure. Why? GST is a business liability. GST is not a personal liability. Now, some people will have an argument. Obviously, they will have an argument, sir. Income tax is also a business liability, sir. I am doing business, then only it is coming. Correct? This is coming to your mind or not? No. It is not only if you do business, then it comes. If you don't do business, you will not pay income tax. Tell me, will you pay income tax on salary or not? Capital gains or not? House property or not? But GST is not like that. GST only arises in what? In business transactions. If you are not doing business, the criteria for GST itself is your turnover should cross 40 lakhs, sorry. And in case of service, it should cross how much? 20 lakhs. So GST is the precondition for GST is doing business or profession. Are you clear? But the precondition for income tax is not that. Yes, businessman will also have to pay income tax. Salaried also have to pay income tax. Capital gains assessee also have to pay income tax. So keep these two sentences in your mind. Very important adjustment. Every attempt they will ask you this adjustment. That assessee has taken a loan to pay income tax. Disallow the interest. Assessee has taken the loan to pay GST liability. Allow the interest. Are you clear? Anything else that comes to your mind used for business and profession? Then I will ask you few more questions. We will read all of them later on. Shall I ask? Listen. I have lots of loan in the balance sheet. Hundreds of crore loan outstanding is there in the balance sheet. Okay. Already I have taken lots of loan in last so many years. Now I am taking another loan this year. Can the assessing officer tell me, no, you already have so much loan. Why the hell you are taking another loan? Can he tell me that? The answer is no. What is his duty? If he wants to disallow the expenditure, what he has to prove? He has to prove that that loan I am not using for what? Business. You cannot say me that how much loan to be taken. Okay. You should not step into the shoes of the assessee. You step into your own shoes. Okay. And be an assessing officer. Don't try to become what? A businessman. A businessman knows when to take a loan, when not to take. Correct? If he is taking a loan, if he is using that loan for the purpose of business, and if he is paying the interest, there is nobody in this world who can stop you to claim the deduction. You have hundreds of crore in your balance sheet as a wealth. Still you can take a loan. It is your choice, na? Yes or no? Nobody can tell you use your personal wealth. It is my choice. Second question. I am taking a loan from a bank or from an NBFC, not from a bank, but at a very high rate of interest, say around 22% per annum is the interest rate. Can assessing officer tell me, why are you taking at such a high rate? You should have taken at 10%, 12%. Tell me please. Again, no. We should say only one thing to the assessing officer. Sir, you please arrange it at 10%. I will take it. Correct or not? I am paying 22%. What may be the reason? I am not getting at 10%. Correct? My credit worthiness is not great. My credit rating might be down. Yes or no? That is the reason the banks and the NBFCs are charging me higher rate of interest. Nobody will pay higher rate of interest by choice. Yes or no? Yeah. If I'm paying higher rate of interest to any of my related parties, then you can raise the question. Yes or no? Then there is a specific provision in the law that you cannot pay excess payment to your related parties. That you disallow now. If I am taking from a third party, I can pay even 30%, 35%, 40%. That is my choice. I am not mad unnecessarily to pay 30, 40%. There is a need. I am not getting from anywhere else. That is the reason I am paying 30, 40%. Are you clear? Now, there is an assessee. There is a very beautiful case law of Delhi High Court. I'll tell you by the name called as Gujarat Guardian Limited. This is the name of the assessee. Don't see the facts. We will read the facts. This is the case of Delhi High Court. Now, what has happened in this case? I'll tell you the facts of the case first. Then we will try to understand who is correct, assessee is correct, or department is correct. This is the assessee. Before that, I would like to say one more thing, and then I will come to this case law, because that one more thing would be helpful for you to analyze this case. It is written over here, interest is supposed to be paid or payable. Now, what do I mean by this? Some interests are allowed on payment basis. Some are allowed on accrual basis. So, sir, which interest is allowed on payment and which are allowed on accrual? All those interests which are covered in 43B are allowed on payment basis. Something which is not covered in 43B are allowed on accrual basis. So, another question will come. Which interests are covered in 43B, correct? And which are not covered? That we will see in 43B, but today also I will tell you. Okay. If you take loan from Indian banks, which banks? Indian banks, Indian financial institution, cooperative bank, scheduled bank, NBFCs. Okay. Then 43B will take care of you. Are you clear? If you take loan from foreign banks, Citibank, Standard Chartered Bank, HSBC Bank, then there is no need to make the payment of interest to claim deduction. You can claim the deduction of interest by which mode? Accrual mode. Is it clear, all of you? We will see the provision later on in 43B. Obviously, the government will protect which banks? Indian banks. Why the hell they will protect foreign banks, correct? The government is telling you that if you take loan from an Indian bank, pay the interest, otherwise we will not give you the deduction. The government is indirectly telling you, if you take a loan from a foreign bank, you want to pay, you pay, don't want to pay, don't pay. It is your choice, okay? Are you clear? That's what it means, correct? Otherwise, they would have also been covered in 43B. So, the government is protecting the interest of Indian bank, not of foreign banks. All kind of Indian banks, public bank, private bank, NBFCs, all cooperative bank, scheduled bank, every kind of bank is covered if it is registered in India, okay? Now coming to this case law, beautiful case law it is. We are going to learn a lot of things out of this case law. The SSC has taken a loan from an Indian bank, IDBI. Okay, that is the reason I told you the point of Indian bank is covered in 43B. The SSC has taken some loan from IDBI. Okay. Obviously, this loan is for what? For business and profession. Otherwise, the deduction will not be allowed only to you. Now, after a few years, the SSC went to the bank for restructuring the interest rate. The SSC went to the bank and SSC requested the bank that please reduce my interest rate. Okay. So the bank said that yes, we will reduce your interest rate, but you have to pay one lump sum prepayment premium of say 1.2 lakh rupees. You pay this 1.2 lakh rupees, we will reduce your interest. Okay. The tenure of the loan is another 10 years. The company thought, yeah, we are paying 1.2 lakhs and the rate will reduce and we will get the benefit for the next 10 years. The company paid 1.2 lakhs and reduced the interest. Okay. So you can say it is nothing but a bribe to reduce your interest. That's it. The kind of bribe you are paying to the bank, official bribe, which is allowed as per RBI. If you want to reduce the rate of interest, you have to pay some premium to the bank. So I'm paying this 1.2 lakh premium to the bank and I'm getting my rate of interest reduced. Now the SSC claimed this as what? As a deduction in PGBP. The assessing officer is saying that yes, I will give you that as a deduction, but not in 1 year. I will allow you this over the life of the loan, and the remaining life of the loan was around 10 years. So the AO said that I will write off this over 10 years and you can take 12,000 rupees deduction every year. So the fight is very simple. This lump sum prepayment premium which I paid to the bank for reduction of interest with respect to my debt borrowed, which I paid in one shot, I paid in 1 year. Will this be, don't answer anything, just think on it. Will this be allowed as a deduction in 1 year, which assessee is saying? Or should this be apportioned over 10 years as assessing officer is saying? Okay. The matter went to the Delhi High Court. Obviously, the assessee is saying I want in 1 year because I paid the money. The department is saying no, we will allow you in 10 years. So now what is your opinion, whether it should be allowed in 1 year or whether it should be allowed in 10 years? Tell me. 1 year? You have to give justification. When a judge of a court gives justification now, listen. The judge has to give the basis for its judgment. The judge cannot say that you are correct. If the person is asking how he is correct, you cannot ask me, I am judge. The judge cannot say that. The judge has to write everything in the order, that why this justice has been given to this person. What is the reason for this justice? So you have to tell me the reason. You cannot just say yes or no, please. Whether it will be allowed in one shot or whether it will be allowed in 10 years. One shot. I would like to ask you one thing. I'm not saying whether your answer is correct or wrong. I want to further stress the discussion. This deduction is for which expense? Louder. Interest, correct? Do you know the definition of interest? I'm just asking. What do you feel? Is it defined in the law? What do you feel? No? Yes, it is. So shall we, before making the judgment, shall we see the definition of interest once? Tell me. It is defined in section 2, clause 28A. It means it will be applicable to the entire, wherever the term interest will come, you will apply the same definition that we are going to see today. Are you clear? Shall we see? Then make a judgment on that case law. Are you clear? Because without knowing the entire law, how can you be a judge? Yes or no? For being a judge, you need to know the law first. Correct? Okay. So this is the definition of interest. You can see on the board. Point number 2. Page number 1.13. Have you seen? What does it say? Interest will not only include interest, but also include any other charge of similar nature. Yes. Now, keeping this thing in mind, you have to now think whether the assessee who is paying this lump sum prepayment premium of 1.2 lakh, can I tag that as interest? Louder. Is it interest? Are you taking loan from an Indian bank? Will it come under 43B? So therefore, the expenses shall be allowed on what basis? Payment basis. This case law is not there in your study material. Okay. They have directly put this case law in the questions. Where? Directly in the question, not in the explanation. Are you clear? It is there in our question bank also. Don't worry. Okay. There are many case laws which they have removed from the study material because it has become old. Okay. This was a very old case law of 1998 or 2000, I guess. But they forgot to remove from the questions. So that is the reason we have to see that also. Okay. We cannot take a chance. Whenever the questions will come after 4 or 5 days, we will see this case law. It is there in your question bank. Okay. Don't worry. You may not remember the name, but at least you should know what is the impact of the judgment. Yes. So that doesn't go wrong. Correct? Please keep this thing in your mind. There is another case law which is there in your study material also, which is there in your questions also, both. Pay attention on the board. That case law is of Supreme Court SA Builders Limited. Again, I am putting the facts of the case on the board. You please try to answer what is your opinion on this. The assessee has taken huge loans. This is the balance sheet of the assessee. Huge loans of 10,000 crores, say at the rate of 10%. Now, some portion of this loan, the assessee has diverted to its sister concern. Sister concern means a kind of, say, subsidiary, etc. Okay, related party. Now, suppose, let's take number, say 6,000 crore is what? Diverted to sister concern, which is the subsidiary of the assessee. Now, the AO is coming forward and saying that I will not allow you 10% on entire 10,000 crore because 6,000 crore you have diverted to whom? I will only allow you on 4,000 crore, 6,000 crore interest I will disallow. Okay. I am not ready to give you anything, any facts beyond this. Only this much I would like to tell you. If you ask me, I will tell you some extra facts. I'll again repeat my facts. There is an assessee who has taken a loan of 10,000 crores. Out of that, 6,000 crore is diverted to what? Sister concern. For what purpose? I have not told you. Okay. Are you clear? If you ask me, I will tell you. Okay. I will ask you. Wait, let me. You have given it to sister concern, and therefore the AO is disallowing the proportionate interest in the hands of the assessee. Okay. Now, if you want to ask me something, you can ask. For what purpose it has been given to sister concern? The sister concern is using that money for the personal purpose of the directors. The directors are going on a foreign trip, etc., etc., all these things. Okay. Who is correct then? Assessing officer is correct? Tell me. Yes or no? The sister concern is using for manufacturing purpose, which is part and parcel of the assessee's business. Tell me. Then it should be allowed? Tell me. That's what the court has also said. The court said that every diversion to a sister concern need not be tax evasion. You have to look into the commercial expediency of the business. You have to look into the facts and circumstances of every case. If the money is diverted to sister concern and if the sister concern is deeply connected to the main entity and it is a part and parcel, it is an extended arm of the existing entity and the sister concern is using the money for the business and profession of the whole group, then it should be allowed as a deduction. It is nowhere written in the law that if the money which you borrow under 3613 should be used for your own business. It is nowhere written. Okay. The phrase used in the law is, it should be used for the purpose of business and profession, which is a very larger phrase. Are you clear or not? Similarly, the court has said in this case that if the sister concern is using the money for the personal purpose of the directors and it has nothing to do with the parent company, then you should disallow the proportionate interest. You have the right to disallow. But every money given to the subsidiary or sister concern is not a diversion. Let me give you one practical example. Reliance Industry. Under that comes Reliance Jio, correct? Which runs under Reliance Infocom. Now, Reliance Infocom is a 100% subsidiary of Reliance Industry. Now, he is known in the industry. Reliance Industry. Infocom is a new company. Few years back it has come, correct? Reliance Industry is an old company, 40-year-old, 50-year-old. So, if Infocom wants some money for expansion, Reliance goes to the bank, takes the loan and give it to Infocom. That cannot be called as what? Diversion of the fund. That is a part and parcel of the business. That is my subsidiary. Whatever earnings my subsidiary will earn, that belongs to me only. And that will ultimately go to my shareholders. Sometimes the subsidiary does not have a standing in the market. They are small. The parent is big. The parent has the power to negotiate with the banks. Subsidiary does not have. So the parent will get more funds from the bank. The parent will get the funds at a very good rate of interest. Yes or no? So why the subsidiary will go to the bank and take loan? Are you clear? You have to look into the facts and circumstances of every case and decide whether the funds are diverted or it is not diverted. Are you clear? It is manipulated or whether it is not manipulated. You can read this case law from here, beautifully written. Okay. Under section 3613. I want you all to read it once so that you get used to with the language of the provision over here. Page number 3.3. This case law completely. You can do it from the color book also. It's okay. But to get the language in your mind, you need to read this paragraph once. On the day of exam, you can directly read from there. It's okay. Now to consolidate this section, we will come here and consolidate what all points we have seen. First of all, the first point is extremely important. Mark this down. Very important. If you take loan for payment of what? Not allowed. Loan for payment of allowed. Then the definition of interest, which is applicable to the whole act. Wherever the term interest will come, it will be the same definition. That's the reason I've written something in the bracket. Also refer 915. This will be helpful for you later on. Okay. It's an interlinking with some other provision. You will realize the importance of this once we do 915. Then comes essay builder case law. Supreme Court, the same thing was also said by Delhi High Court in the case of Reebok India Company. The facts were similar. You can mention either of the case in the exam if you want. Okay. Or if you don't want to mention the case, that also is okay. But you need to write the content properly. Then certain interests are subject to what? 43B. If you want to write down in the bracket, write down right now itself. Indian banks and financial institutions are covered in 43B. Okay. Shall I go ahead? Next deduction, not very important for exam. 3613A, not very important for exam. Let me tell you very clearly. This is known as discount on zero coupon bond. Have you heard about this bond? What happens in this bond? You don't get any interest, correct? You are an investor in my company. I will give you a bond. You will pay me money. But I will not pay you interest. Then what will I give you then? The redeemable value will be more. The issue value will be less, correct? Now let's take an example on the board. See on the board, please, all of you. A Limited is a company. It is issuing 10,000 zero coupon bonds. Issue value is suppose 50 rupees. Okay. Life of the bond is 5 years. Okay. Issue date is 1st April 2025. Therefore, redemption date will be 31st March 2030. Okay. The redeemable value is 100 rupees. So the company is issuing the bond of 100 rupees at a discount of 50. Correct? Today, the company is going to get 5 lakh rupees. Yes. After 5 years, the company is going to pay you how much? 10 lakh. So what is the cost of the company? 5 lakh. That 5 lakh which is extra paid by the company, this is nothing but discount. Correct? And this is the cost to the company. So the company, and this is an income for the investor. So the company wants deduction of this 5 lakh. How will they get the deduction of this 5 lakh? The law says that you should take over the life of the bond. Okay? So I should divide by how much? Tell me. 5 years. I am doing whatever you guys are saying. I am not doing what I like. Okay? I am doing what you have said. You have said what? Divide by 5 years. It will become what? 1 lakh rupees per year. You can claim in 25, 26, 26, 27, 27, 28, 28, 29 and 29, 30. That is the 5th and the last year. Okay? I did on the board what you said. Now I am changing the dates. Whatever you said, you don't change your answer now, please. A Limited is here. It is issuing 10,000 bonds. Okay. The issue value is 50 rupees. The redeemable value is 100 rupees, same. Life is 5 years. Issue date is 13th of September 2025. Therefore, redemption date will be 12th of September 2030. Is it clear? How much discount the company is going to give in this 5 years? 5 lakhs. Okay. This will be allowed over the life of the bond. Correct? I should divide by how much? How much? Tell me. 5 years? 5 years? How much? Tell me. You have to say something at this. Even if it is wrong, it's okay. How many months? Why are you changing to months now? Why didn't you say months in the previous question? See, you have to divide by months, not by years. Always. The reason, no doubt the law is saying so, obviously, but there has to be some reason why the law is saying. If you divide by 5, I agree that years are 5, correct? But the financial year are 6. Which is the first financial year? 25, 26, 27, 28, 29. Should I stop? Should I stop? There are 6 years, no? Correct. There are not 5. In this, the life was 5 years, the number of years were also 5. Are you clear? Because it was starting from 1st April, correct? But it is not necessary na, that everybody will issue bond on first day only, correct? I may issue middle of the year, like I have issued on 13th of September. The law says never divide by years, divide by months. Okay. So now we have to divide by months. Wait, don't make any conclusion. The law says that in whichever month you are computing this from whose perspective, investor or company? Company. You stand in the company's position and think, if in a particular month the company has issued the bond and it has been 15 days or more, you have to take that month as a complete month. Okay. How many days? If the bonds are issued and there has been 15 days or more after issuing the bonds, okay, you have to take that as a complete month. So by that logic, in 25-26, we have issued the bond on which date? 13 September. Shall I count September? Yes, 13 September to 30th September, it comes to 18 days, correct? September, October, November, December, Jan, Feb, March. How many months in the first year? 7 months, okay? Now next year, obviously 12 months. 12, 12, 12. And last year, how many months? 5 months. You will not take September because now in September there are only 12 days, correct? Take 5 months. Obviously the total will come to 60 only. Is it clear? Are you clear? Divide this by 60 months. Okay? You will get 8,333 per month. Now you multiply this with. Are you clear? You will get exactly how much? 5 lakh rupees. Is it clear? Please copy this. Hello, hello. Written? There is one example over here. Please try to get the answer. Page number 3.4. What is the answer to this? How many months are coming in the denominator? How many? 57. You will count October? Yes, because there are 22 days in October, correct? 10th October to 31st October. You will count July? No. So from October to June 2030, it comes to 57 months. You will divide by 57 and you will accordingly proportionately take the deduction. Is it clear? I'm not saying that this is very important, not very important, because again, it is very specific. Not every company issues zero coupon bond, so not very important for exam. Pay attention now. Now we are moving ahead towards some extremely important deductions which are going to be definitely part of your question in the exam. 100% the next few deductions are going to be there in the paper. Famous deductions these are. That is, if I am an employer, pay attention please. I am an employer and I am opening certain retirement funds for you all. You are my employee. Like I am opening a provident fund for you and I am putting money in that. Okay. I am opening a gratuity fund for you and I am putting money in that. I am opening a pension fund for you and I am contributing you that. So all these are my expenses. Tell me. The employer will get deduction for the same. Okay. Now we need to be very careful how much deduction will be available, which fund has to be there, which provident fund. There are different kinds of provident fund, correct? So step by step, I am saying now, you the deductions with respect to employee benefits. There are three deductions that we are going to see one by one with respect to employee benefit. Pay attention on the board. First one is section 36, subsection 1, clause 4. This section says that employer's contribution to recognized provident fund. Which provident fund? Recognized provident fund. If employer contributes to a recognized provident fund, he will be eligible for deduction. If he contributes to unrecognized provident fund, disallowed. Or approved superannuation fund, etc. The fund has to be approved. Then the employer will get deduction. I am circling the word employer. It is employer's expense. Similarly, next section 36, subsection 1, clause 4A. Again, employer's contribution to approved pension scheme. It is allowed as a deduction to the employer. So in the first case, we are contributing to provident funds. Second, we are contributing to pension funds. But in the second one, this is the most important out of all the points we are going to discuss here. Second one. Here, there is a maximum cap on the deduction. Maximum limit is there. The government has put a limit over here. The deduction will be subject to 14% of salary. How much? Whatever the employer contributes, you have to compare that with 14% of the salary. It cannot be more than 14% of the salary. If it is more than 14% of the salary, it will be restricted to 14%. Are you clear? Now you will ask me one question. You would have done salary chapter in your CA Inter, correct? Salary has its own definitions at different places, correct? Then what is the definition of salary over here? Okay. So for the purpose of this section, salary includes basic salary plus DA in terms. Okay. There are two DAs, right? One is called as DA in terms. Second is called as DA not in terms. Have you heard or not this kind of words? 100%. It is not possible to do a salary ka question in CA Enter without knowing what is DA in terms and what is DA not in terms. The difference is very simple. One, what is DA first of all? But I don't, apart from full form, please. What is DA? I don't want full form. Meaning. What is DA? Excellent. To accommodate your inflation, the company gives you extra money. That is called as dearness allowance. It is to accommodate to beat the inflation. The company pays you something extra. Okay. That is called as dearness allowances. Now, there are two types of dearness allowances which a company can give you. One is called as DA in terms, one is called as DA not in terms. What is the difference? Yeah, please, anybody? Yeah, can you elaborate further? Will be getting the allowance? No. Let me say. In terms means something which is a part of your agreement with the company. Okay. The company is putting it in your agreement that every year we will give you what? This much dearness allowance. Every year we will give you. Because we know that inflations are going to increase only. Okay. It is not going to decrease. One DA is called as DA not in terms. It is not in the agreement. The company is saying that we are hiring you. We will not give you any DA as of now. But if there is an inflation, okay, we will pay you some extra money as a dearness allowance. That is called as DA not in terms of your agreement. Here you are supposed to take which DA? They will give you both in the exam. Okay. You have to be very careful with that. You have to only take which DA? DA in terms. DA in terms is also known by some other name, what this girl has said. That DA in terms is also called as DA which forms part of retirement benefit. It is also, write down somewhere please if you want to write down. You can write at the top of your color book. DA in terms is also called as DA which forms part of retirement benefits. In CA Inter, there are so many different kind of exemptions in salary. In some exemptions, you take DA in terms. In some exemptions, you take both DA. How you don't know the difference between the two? I'll repeat once again. DA in terms is also called as DA which forms part of retirement benefits. So you will only take DA in terms here. Now coming back to the first section over here. In the first section, there is no limitation of amount. Okay. Even if you contribute 10 crore rupees to the employer's provident fund, it will be allowed. But in the second case, it is restricted to 14%. This amendment was made in last year. Last year it was 10%. So last year they increased that to 14%. Okay. So this 14% is increased in Finance Act 2024. The third and the last retirement benefit that the income tax law allows you over here is again employer's contribution to approved gratuity fund. Again here there is no limit. The limit is only in the second case, not in the first and the third case. So total how many funds the employer is contributing for you? Tell me. 3 funds. Recognized provident fund, etc. Pension fund and gratuity fund. Now, one common thing about all three of them is all three of them are subject to 43B. It means you will get the deduction of all three of them when you actually put the money in the fund. Correct? The employer is passing a journal entry. Employer contribution account debit to employer contribution payable. Will you get the deduction? No. Pay the money to the fund. Then you will get. Are you clear? Now I have one simple question to all of you. If you can answer. Under 43B, you have to pay by which date? Tell me now, please. Am I supposed to pay in the same month? Can I pay till the due date of return? That everybody knows now. Please tell me. So for previous year 25-26, I need to pay till when? For previous year 25-26, I can pay these contributions till when? Due date of return might be July. Yes. For some people it is July now. For some people it is October, correct? And for some transfer pricing associate is November, right? So the due date might change depending upon person to person. So the law does not tell you to pay till March. The law gives you option till due date. Correct. It's a liberty. Tell me now. Yeah, it's a liberty that till the filing of return, whenever you have money, you pay. Then you will get the deduction. Are you clear? Are these three contributions employer bearing from its pocket? Louder. Yes. Therefore, employer is getting deduction. Now the next one, listen. Previous year 25-26 is going on. Pay attention. There is an employer over here. There is an employee over here. And the April 2025 month is going on. The salary of the employee is 1 lakh rupees per month, for example. The salary is 1 lakh rupees per month. Now listen carefully. There is a recognized provident fund account over here. The employer will contribute 5,000 rupees from his pocket as his contribution. Will he get the deduction of this under section 3614? Yes. But we all should know this, and we all know, I know that you all know this, that the employer will also deduct, say, approximately 5,000 rupees from employee's salary also. Yes. And that will also be paid to the fund. This is whose contribution? Employee's contribution. Correct. Is this 5,000 borne by the employer? Yes. Therefore, he is getting the deduction. Is this 5,000 borne by the employer? This is who is bearing this? Employee. Technically speaking, this 5,000 rupees, which is employee's contribution, should that be allowed as a deduction to employer? Louder. Technically speaking, no. Correct? But the income tax law gives employer the deduction of employee's contribution also under section 36 subsection 1 clause 5A. This was 5. This is 5A. Now after listening this is slightly shocking. How the government is giving the employer deduction of somebody else's contribution, yes or no? Don't be misunderstand and don't be under an impression that the government is so merciful. Okay. There is something hidden over here. Correct? See what the law says. See on the board. This 5,000 is allowed as a deduction to the employer. Is anybody having any doubt with respect to this 5,000? No. This is employer's own contribution he is bearing from his pocket. So he will get the deduction. This is not bearing. This is just deducting from somebody else's money and giving it to the government, and the government is giving deduction on that also. Not as simple as this. Okay. There is some related provision we need to see to understand this. What does the law say? Say on the board. This is the salary of April 2025, and suppose the company has a policy that we pay salary by 5th of the following month. Okay. So we will be paying the salary of April on which date? 5th of May. So can I say it is on 5th of May that I have deducted 5,000 from your salary? Say now please. The law says, listen employer, the moment you will deduct employee's contribution from the employee's salary, which we are deducting on which date? 5th of next month, correct? That employer should show as a income. Add to the income. Okay. You have to add it to the income. Technically speaking, is it my income? Still add it. Sir, where it is written? It is written in the definition of income. Where it is written? Under section 2, clause 24, subclause 10. There are 31 clauses in the definition of income, and such kind of things are also there. Apart from salary, PGPP, capital gains, house property, rent, etc., dividend, employee's contribution, when deducted, is considered as what? As income of the employer. You will say it is injustice to the employer, correct? There is nothing like injustice. You will come to know in 5 minutes. This is whose money? What is your duty as an employer? To deposit to the recognized provident fund on time. You all are tax auditors. What is the due date to deposit the recognized provident fund? 15th of the following month, correct? You deducted on which date? This belongs to which month? April. Pay by 15th of May. If you pay by 15th of May, okay, we will give you deduction under section 36, 15A, 5,000 rupees. Is this income nullified? Are you paying tax on this 5,000 now? No. So the government will make this 5,000 rupees first as your income, so that you should be very concerned about what? Depositing that by what? 15th, by the due date. Now listen carefully. Employer contribution is covered in 43B. For that you have time till the due date of filing of return. Are you clear? But here you have time only till what? 15th of the following month. If 15 becomes 16 now, forget this deduction. This will be part of your income, pay tax now. Are you clear? 15 should not become 16. And that is the reason. All those who have done tax audit, you have to make a schedule, correct? Deducted on which date? What is the due date? Number of days of delay. Yes? This is what we have to report in the tax audit, whether the employer and employee's contribution are paid on time or not. See, if you see only this as a provision, you will feel it is a benefit, correct? If you see only this as a provision, you will say it is wrong, injustice, correct? But if you mix both of them and check, then you will find that this is logic. First, consider that as a income and then pay by 15th of the following month. Sir, why such strict time limit for employee contribution? 15th. And why such liberal time limit for employer contribution? I'll give you a simple example. I gave you around 5,000 rupees today. Okay. I told you that please give it to your neighbor. He is my relative. When should you give them? After 6 months? Tell me now. Today, or maybe if you are busy tomorrow, day after tomorrow, 2-3 days, correct? Somebody else's money you should pay on priority or not? Please tell me. Your own money you can pay later on, correct? So be very careful. Employer, they will put in the exam something like this. See, this is previous year 25-26. Employer contribution of March 26. Employee contribution of March 26. Paid in June 26. Paid in June 26. What will happen with this? Tell me. Allowed. What will happen with this? Not allowed. This is covered under 43B. In 43B, you have time till return due date. This is covered under 36(1)(5)(a) itself. And here they are saying you have to pay before the relevant fund due date. Relevant fund due date you have to pay. And the relevant fund due date is 15th of following month. Is it clear? You can read this from here. I have put all the things over here very precisely. This till here. Very important, these 4 sections. Extremely important. One of the reason we are doing this 36 is because of these 4 sections only. Something out of the 4 will definitely be tested. The middle one is very important, that 14% salary one. And this employee contribution also they test again and again. So which all deductions we have seen so far, we will talk about them once and then we will take a break. You have your breakfast, and then after the breakfast, we will continue 36 series. It will complete in say maybe in 45 minutes, and then we will start with our sector wise deduction today. One sector at least we can see in today's session. Sector wise are big deductions, it take time. So we started with 43AA, not very important. I am not much interested in that. I am interested from 30. Section 30 covers which deduction? Rent, rates and taxes, repairs and insurance of building. The rates and taxes are subject to 43B. Repairs are supposed to be whether I will get capital repair deduction. I am the owner, will I get? I am an owner of the building, I am doing capital repair. Will I get? I have to add to the cost of asset and claim depreciation. Whether a tenant will also get? How? Tenant will also make a deemed building block and he will claim depreciation. Correct? Then insurance premium of building is also allowed. Okay. Then comes what? 31. Okay. Repairs and insurance of plant, machinery and furniture. What about rent? Rent is covered. It may be covered in 37(1). Later on we will see. Then 36. First we saw what? Insurance of stock. Then we saw what? Insurance of employees. Health insurance of employees. Now one student has asked me one question which I would like to address to all of you. He has asked me, sir, what about if I take insurance of livestock? Okay. Whose insurance? Livestock. You can open your detailed book, please. There is one more insurance which I have not spoken, not very important, but it is my duty to speak once. 36(1). You can see on the board on page number 3.2, this point number 2, 36 subsection 1 clause 1A. Can you see? Here the government gives deduction only to milk cooperative society. Whom? If you are like Amul. Amul is a milk cooperative society, correct? Which makes milk and other products, dairy products. So for them, cattle is the most important asset. Tell me. So if they take insurance of their cattle, check, they will get the deduction. Check. Is it clear? Only to milk cooperative society, not to others. Then you will ask me, what about others? Then you have to go to 37.1. You don't have any other option. Are you clear or not? You go check if the conditions are fulfilled. You can claim over there. Are you clear? So if anything which is not there, you don't have to be worrying about it. You have last option 37.1, and believe me, maximum time you will give to 30 to 36. But maximum deductions in practical life you claim are from 37.1 only. Are you clear? It is not that 37.1 is it's very wide in scope. 90% of the assessees deductions come under 37.1 only. Okay. So anything which is not there over here, you should go and check 37.1. Not now, after we are done with it. Okay. Right now we don't know the conditions of 37.1. Now coming to what? The deductions. The third one which we did in 36 was bonus and commission. That is also subject to what? 43B. Correct? In that we have done that the bonus and commission should not be your distribution of profits. Correct? For that you have to keep that example in your mind of 4 shareholders. Yes? Then came with the very important section 36(1)(3). I will directly ask you the important aspects in that. If I take the loan for paying income tax, will I be allowed? GST? Allowed. If I take the loan and give it to the sister concern, that depends upon facts and circumstance. Correct? If I take the loan and then I go to the bank to reduce my interest for which I pay prepayment premium, will I be allowed in 1 year or 10 years or 5 years? 1 year. It is an interest only. Correct? So one student has asked me one question which is there in your detailed book also. Don't see. I would like to just confirm whether you know this or not. Litigation expense if I pay. What expense? A chartered accountant is fighting case for me. Okay. Whether that will be allowed as an expense in business and profession? Yes, it is allowed. Where? 37.1. Are you clear? That is allowed as a business expense which is written in your book. We will talk about that in 37 once again. Litigation expenses are allowed as a part of business. Whether it is GST or income tax, it doesn't matter. Tax audit fees also what you pay. You claim na in your P&L account. Yes. Then zero coupon bond, not very important honestly speaking. So I'm not speaking much on that. But still one important aspect you have to keep it in mind. When you divide by months and not years, please. And months have to be of 15 days or more. If it is less than 15, ignore. Then the last thing was the deductions which we saw just now. That is 3 employers contribution, 1 employee contribution, and in that pension is subject to some percentage. Okay. 14% of basic plus DA in terms. So if your basic and DA in terms is 10 lakh. Okay. And if you are contributing 2 lakh, then what will happen? 1 lakh 40 allowed, 60,000 disallowed. Are you clear? And then employee contribution will be first considered as income and then pay by 15th of the following month. So you will get the deduction. Otherwise, it will be part of your income. Pay tax on that. Okay. You also have to bear the interest under the Provident Fund Act for paying late. Tell me. That is a different thing. That you will pay to the Provident Fund people. Yes or no? That is over and above what you are going to get the disallowance. Okay.